Not my screen. Master Dennis's screen.
Dennis, is that your screen with a tent in the background?
Yeah.
Okay, we
I
can't
think
see
it's mine. I think that's my screen.
No, is there a mouse moving around in circles on this screen?
Oh yes, it's Master Dennis's.
Right, give me a
we just
second.
can't see your face, Dennis.
Don't worry, let me just try to sort one thing out at a time.
Sure.
You guys see a chart or not?
Yes, we do.
Right. Right, that's cool. I'm going to move this. I'm going to move this. I think, I don't know why my face ain't there, but it's probably lighter on everybody's eyes.
If you hover your mouse bottom left of the computer, you should see a stop video. You should.
All right, got it. Yeah, I'm bringing up tools now. Yeah, okay. Right. I don't think you guys need to see me, but you can hear me, right? Is that okay? Because I can't find where the video is, so it's just not there. Show large speaker video. Don't know. Right, so just a second, guys. Give me a second.
You should see bottom left. It says stop video or start video.
Oh yeah. You have to be bottom left. Okay. So, all right. Can you confirm? Can you confirm? All right. Is the sound okay?
Yep, I can hear you and I can see you and I can see your screen.
Yeah, all right. So, firstly, you see the mouse and everything, just because I'm a bit annoying, you can see the mouse.
I can see the mouse.
Yeah. All right, so I think we got to a point whereby we were talking about things that were not what you would not expect to see happen in a downtrend, yeah? Which gives you, oh no, we didn't. We got to the point whereby we were talking about where would I take an entry personally, yeah? I think that was right, yeah? We got to a point where...
that's where we were.
Well,
you were going to point out after that little bit of absorption on that up move where you would have gotten in after the fact.
Yeah, because your question was a really good question, because a lot of people, I've done a lot of videos and people still misconceive the entry. They always think that the entry is the event. The event is never the entry. The event is a reason to look for an entry later on, yeah? It's always that way in trading. It's counterintuitive. Like, if somebody walked out in front of your car, the first indication that you would do is just to stop, right? Stop the car, put your foot on the brakes. But in trading, you never do that. You just don't react. You just take that as a signal of something's going to change in the future. So in trading, somebody walks out in front of the car, you just run them over. And then later on, you know there will be consequences, okay? And those consequences is when you act. That's the difference in trading. It's counterintuitive. That's why I always say that. It's counterintuitive, everything. An event is not a reason to execute a trade. You never, an event, you don't choose a place in the market to do business because of an event, okay? You choose a place to do business after the event, because the event is never confirmation of an entry. The event is only a confirmation of a possibility of an entry. So I'll show you that on chart. So we got to this where the mouse is and the arrow. That's an event. It's not confirmation of an entry. It's the event. Okay? So when I look back at the past, I can see, I want to bring this chart to the side because I don't like looking at the future, you know, with candles in front of me, you know. I like to not see anything in front of me. I have to go to the right. Okay, so that really didn't tell me anything. So if I'm here, I wouldn't trust that as being confirmation, okay, of an entry. I would just say that, well, bulls are gaining strength, not much, gaining some. From this point here, I would mark this as an event, and I'd mark something else as an event. I'm not sure what the other event I would mark. This, okay? And I would also mark this. And I would also mark, because what I'm doing now is I'm gauging the future, right? What's relevant to the future? All of these points marked, it's marked here because it's this high, right? This price trading above here tells me the price is not indicative of a downtrend, okay? Not only because you've got a channel break, but because this is the high of the downtrend right here where the mouse is, yeah? Can somebody just confirm that my mouse is moving on the screen?
Yes, it's moving. We can see it.
Good. Okay, so when I talk, you have to follow the mouse, yeah? Okay. So at this point here where the mouse is, that what I would say is the most important part of this downtrend is that. And the second most important part of this downtrend is this low, which I'll mark too. I'll mark them both. Because I've got to make a traded decision, right? All these points being marked are the points of relevance. So from this point onwards, I would not short the market unless we broke this. I would only be interested in shorting here. When retail traders will be looking to buy a double bottom, to sell anywhere down here as the market moves, or anywhere on this channel line, I would only want to sell down here. Because if price can only confirm continuation of this downtrend in only one place from now onwards, a break of this low here. So now we want to go to the other side, right? Where would we go long? Okay. Well, obviously, for a short-term view, you could fade this range, right? There's a range you could fade it. Yeah, you can, right? But for a little bit of longer-term trading, for something that you can hold on to, you need a confirmation. So on the short side, you need confirmation of a break of this low. On the long side, you need to ignore the absorption within this range from now and look for absorption above this range. Turn your mics on if you've got a question, because what I just said was really important about where you look for the absorption. Because if you've got a question now, you better get it, because again, I'm going to repeat the same thing because it's really counterintuitive.
Hey, Dennis, it's Aussie Dave again. When you
Yeah.
were talking about the absorption on your initial breakout of that box, and a lot of traders are taught to, if it comes back to the box, there's your trade. Now, would that initial absorption that's just above the box on your first pullback, is that absorption? And would you? I'm assuming obviously you wouldn't take a trade there, but me being me, I'd be going, oh, it's come back to the top of that box. I'd take a trade.
Okay, you're right and you're wrong. I'll tell you why you're right. You're right because I'll take a fade back to the top of the box, right? And that's what you just said.
Right.
But I wouldn't take a fade back to the top of the box in a downtrend, just switching to an uptrend without any other thing to go on. I'm going to wait and for the, I'm going to say it's an event, but now I want to get absorption, which is indicative of absorption once the market starts going long, yeah? Because all of this, we're still fading this range. This market can go short even all the way across here. You could fade this range short everywhere. You could go long here. And a lot of traders went long here, right? As she said. The trader said, well, it gapped up, faded back, I'm going long. Well, it didn't last long, did they?
No.
Yeah. And what probably happened is they did do that, then they lost their patience. They had a fight with the wife and said, screw this, I'm going to come back tomorrow. I'm fed up with trading. It's about trade location, yeah? Timing is everything, right? So, like I said, I didn't even realize that, but yeah, because you brought up the point. No way I'm going to go long on this thing.
Yeah.
Right?
I guess I was just looking at what was the difference between that absorption and the absorption where you put the green arrows, you know?
Yeah. Well,
that would have been my follow-up question.
Yeah. So you've seen these ones now, right?
Right.
These absorption patterns are not really absorption because it's making lower lows, man.
Mm-hmm.
Okay. So the absorption, I would say, ignore it. That's not absorption. That's not absorption. But the bulls have already shown their intent, right?
Mm-hmm.
So what happens is here, all the responsive buyers get in and say, respond, you know? I'm not responsive. Well, I am responsive at the right time, and I'm intuitive. I'm an intuitive buyer at the right time. I know when to balance the two. This is key because it's all about trade location and timing.
Mm.
Because I know from years of experience how pissed off I get when I'm looking at a trade that's not going anywhere. And it's a perfect entry, but it's not the perfect move. So you're hanging on to an entry and you're saying, right, 6 hours have gone. It's grown 40 pips. What's going on? Right? So what I like to do is, and I've done it live even with Pierre and everyone else, I said, enter this currency right fucking now, you know? Because it's exactly the right moment to enter. And as soon as you go in, you're in profit and you hardly have any time to think. You don't need to think. Because trade location and trade timing. Okay, so what I want to do, all I want to do now is that I know I'll get the most perfect sell at a break of this on a fade back. I won't get the most perfect buy here on this fade because it's the first move from a downtrend on the upside, you know? It's not already, it's not confirmed either, but this is good confirmation. So you've got a couple of places to enter where you can just kill the market, all right? And I'm going to put a couple of lines here and I'll show you places where you kill the market now. Then we'll go on to the absorption as we reach it, right? But from what we can see now, I'm telling you where you're going to make money and make an entry. Because we can see this up move. We can see this up move on the corner. We can see this. Imagine this is all what we can see. I have to make a decision, right? So I'm not going to make a decision yet. I'm going to wait for a fade back that doesn't break this. Then I'm going to let it move up. Then I'm going to let it fade back. And then I'm going to enter. And I'll show you exactly where I'll enter. and I'm going to enter. And first we play in the waiting game. The time goes on, right? Waiting, right? Waiting. Not in a hurry. Not in a hurry. Bang. Okay. Now I'm showing you where I'm going to enter now. I'm going to take, remember, I could be wrong, could be right, but this is what I would do based upon what I can see in the future, right? I'm going to get in the market here. I do have a higher high here than that slightly. It's a little bit weak actually, but I'm going to take a shot. This will be my first. I'm going to go a bit lower because I'm going to look at round numbers. I think about this area would be good enough for my first attempt. So I can't see anything. Let the market move. I may have missed it. I should have gone a bit higher here, but that's what I would have done. In reality, we've got to fade back to this area, but I think it's the most perfect entry because the moment you got that entry, you didn't have any doubt. You would have had doubt here. You don't know if it's going to continue going down, right? Mm-hmm. This fade is a confirmation, right? Which we said. And you've got the daily pivot point. You would have took it there. Let's look for another entry. You wait for the fade on this box. The next entry would have been around this area. Okay? But you would have been on a small entry because you don't really have expansion from this point, right? Mm-hmm. So you would have been cautious, okay? Now you're starting to get expansion. You're not going to second guess anything because you can't. All you can do is now this is in profit, cover some risk. You can say to yourself, okay, I'm going to put a stop. I've got some profit. I'll take half profit. You can leave your stop in the same place. And you could take most of the profit and reduce the size of the position that you have. And then the next day, you can add a next position here. There's your gap up, there's your fade back. Now you're doing your gap ups and fade backs because you didn't do this gap up and fade back because it's the beginning of the end of a downtrend, just switching to an uptrend, right? So you could say, I've got enough information to say this is pretty much an uptrend. Yeah. The first positions here.
So yeah, you would take an entry at that top one as long as it stays above that the opening value range there.
Yeah, I would have done here actually, but then you got this absorption, right? Now you're being absorbed, right. Now you're fading back, right? So, but eventually it's going to take off. You know, it's just taking out people, right? So now something else that will give you a clue. Let me give you some other clues. Because timing is everything, right? The easiest way to get the timing right is to know why the market is moving in a certain direction. The easiest way to know why a market is moving in a certain direction is to know why it's moving in a certain direction. So pretty much all the guys who are used to me, I'm not really interested in the market at all. I'm only interested in the market once I know, okay, there's volume at time and at price, right? Which you hear me saying a lot. So if you go to any of my charts, demo, live, whatever, somebody else's chart, whatever, I'm going to always have these two little yellow lines, okay? Doesn't matter what chart you go to, I'm always going to have two little yellow lines. And whatever happened before that, whatever happened, I really don't care. Because the biggest obstacle that traders have in the spot market is that we don't have live volume, right? Not like the exchanges. The exchanges get live volume, so they can anticipate, they can actually physically see volume. I can't physically see volume. So to know where the volume is, I just need to look at the news. I need to plot the news. then I can assume I know where the volume's at. I can control the market. But I'll take questions before we move on about anything we've already discussed, or to go on about, or questions regarding volume, time, price, value.
Again, it's Aussie Dave again. I'm sorry, I'm dominating here with questions. I just have
No,
so
it's
many. The little yellow lines I've noticed those on your charts before, but I hadn't really seen any explanation. I was hoping to get to ask you about those. So what you're saying is those yellow lines usually are the high and low of some news event, if I'm understanding correct?
Yeah, exactly. Whatever news event I will think is significant.
That was my next question. What kind of news event would that be?
Yeah, I'm going to get onto that. I have to get these folks first, mate.
Okay, great. Thanks.
All right, no problem.
Anybody got any questions? If you want to put them in the chat box and we can get Dennis to answer them.
Well, I can say that USD is on the move for those who want to manage positions.
Is USD going up? What's USD doing? It's not doing anything on GJ. Because it's GJ.
UJ.
Yeah. Okay. Right. Should we move off GJ, go to GU or something, right? Okay, so again, we're on the pound dollar now. So again, you know, I've always got two lines marked, right? So for me, I always just trade basically NFP because I just think that that's, for me, and my kind of style of trading, this is where I can get value, right? So if you look at the move from NFP just on GU, we'll take a quick look now. I think we blocked the chart. It's not working. No, it's working. No, it's not working. If you look roughly at the GU figures, you know, that's 271 pips, right? From there. If you take a look at GJ, let's go back on GJ, from NFP, 320 pips. I know because I have it on the live account. Let's try again. Yeah, 320 pips. Going to trade this on live. 329 pips. So obviously, the whole game is to work out where the smart money is, right? In trading, if you're not trading with the smart money, you're not going to make money. So it doesn't matter how clever we want to be. We just need to just follow volume, and just follow it. So I'll zoom in on an NFP day, right? Let's just make this a bit bigger. Do this one as well. This one coming in. So if we take a look at what we had to look at on that day, you can see all the volume is driven on this particular day, right? This is NFP high and the NFP low. I didn't wait for my order there. I got my orders here, right? Phil, see? Yeah. That's the next day, meaning after the Friday. Yeah? No, actually, no, it's just, yeah, maybe the same day, then not sure exactly what day. Yeah. Okay, so this is the event in the yellow box. Let's make it bigger so you can see it. On this day here was non-farm payroll, right? Now, what you want to look at is to guess, it's a guess, but you get better at it, is where the volume is. How I guess this volume is, if it's high volatility, I use a couple of 15 bar candles, right? So we saw this high volatility out. We get this one. I went in early. That would be for a different reason, because I recognize this shoulder here. The market had been trying to push up the whole day, you know. So once you've got this identified, that's your NFP range, there's not much for you as a trader to think about. Just be long. If it's above this range, just be long. And run that trade as long as you can. Questions? I'll show you how to do execution in a minute. But you have to understand, if you're above the non-farm payroll, be long as you can be. So maybe you can get 8 days out being long and survive, 2 days out being long and survive, 1 month out being long and survive. There's nothing to think about.
Hi, Dennis. It's Dave again.
Yeah.
When you're marking that range, is that just, I know it's a 15-minute chart, but you have that big up move. Is that the whole NFP move, that big move? And is that the whole range, or are you just doing part of the range? I'm a little lost on how you're determining that range.
It's subjective, because
They're subjective.
I mean,
okay.
yeah, I taught most of the guys about trading this NFP range. And I said it's subjective as much as you want it to be, you know?
Mm-hmm.
The idea is, well, for me, I like 15-minute bar. 1 or 2 15-minute bars, I'm done, yeah? So I think this was the initial push up here.
I see.
Yeah? You know, it gapped, went down, you know? And you see, I've got in really early, right? Yeah.
Mm-hmm.
Forget about this. That's a different entry. I don't want to go on to why I took longs here, right? But this is the key here. And then what did I do? I just waited for I took those entries, and the next day waited for a fade back here to the daily pivot point, which is that one, yeah?
Mm-hmm.
Get some slippage, huh? There's an entry here, huh? I tried to get an entry on this day, but I never got a fade back, see? Market just pushed up, and it was under. I went short, I kept my longs open. I thought, hang on a minute, I want to protect this, let me hedge. And then it just flipped up. I didn't really get a good fade, so I couldn't catch it. Took a small loss here, right? Let these things run. And there's even a small loss in here. I'll show you how you don't have to be subjective. There's a small loss in there as well, yeah? Because I saw the market flying down. I thought I'll sell the top. Maybe we're going to test the bottom, right? This will lock in my profits, right? From these orders. This order was already taking profit. And it didn't. I left the stop loss. Stop loss was taken out here. I let these ones run. More than recovered, loss. Market pulled down. It's under the daily pivot point, so I took a short. Didn't work out, took a loss. I don't care, right? I'm making this.
Mm.
You know, it shouldn't be subjective, right? If you're trading below, take a short, right? But you should stay with this. But I didn't see much expansion up until this point, right? Not much expansion. So I figured maybe we're going to just retest the range, fade the range. If you go into the downside, it did it last month, okay? And but it didn't. Started moving on. Didn't matter. Got my positions open already. Let it go. Took my loss right here. Let my longs keep running. Probably didn't. I don't know if I put an order here or not. We'll see. Yeah. There's an order. Long green. An additional order. Is it an order? But yeah, it's a loss. See, I went long. Non-subjectively, right? See, the green line goes to here. That's a loss. That's a loss of about 25 pips. Yeah. Correct? This is a bigger loss here, I think. 54 pips on that one. Yeah. Let me just shrink the chart. I want to move it too far forward. So then you can say you lost 54 from not being subjective, plus 25, 80 pip loss, right? And then from the winning side, I don't know. Hang on. That's 300 pips. And then you got another 70 pips there. So you can't complain, right? So what I'm trying to tell you guys what I'm trying to explain to you guys, you don't need to be subjective. You just go for it.
Dennis, can you look at yesterday? I took an entry at about 150.50, somewhere around there. But I know chatting on the group chat yesterday, you weren't looking at it to go long.
Really?
Yesterday's 150.50.
Okay, hang on a minute. Yeah? 150, you mean?
Is that where's yesterday? Sorry, no, there.
150 is not possible.
No, 150, sorry.
150.
151.
Here,
0.50.
you mean here?
Yeah, so just above that. Yeah, so at the pivot point, I went in. Yeah,
Oh,
around
V
there.
down day.
Yeah.
Yeah. V down day. Look. Yeah, I'll explain that as well. Normally on the third or fourth day, you get a slight push down and then you enter, yeah? But you actually get it here as well, look. So you got 1, 2, 3, 4, and then you V down. See the V down? It's
So
right here.
Was there any other clues, whether it's the third or the fourth day?
It always works that. What I'll do is I'll show you that, because on any move, you normally get 3 or 4 days, it moves up, yeah? And then you get a pull down day. So this is actually the pull down day. There it was. So,
Okay, so
maybe
because
that was what you were expecting.
I'm in Australia, so I enter with the Asian session. So I've got a limit order set there, say, so first thing when it opens up.
Yeah, well, it's perfect because it's still on the daily PP. And there is no reason not to buy. You just have to manage, well, where should my stop be, right?
Yeah.
It's going to be a bit wider today because I know it's the fourth day. There's going to be a pullback, no?
Yeah.
All right. So I mean, let's find another trend. You normally find it. Now let's take a look. Let's try something different. GU, yeah. Look at GU. Same thing, right? 1, 2, 3, 4. There's your V down, no?
So when would you get back in? So just say with that GJ, so I got stopped out at about 30 pips because I just had a fixed stop loss at 30 pips.
Yeah, but it would have been a good trade, right?
Would have been a brilliant trade. But my question is, I actually watched it go down, but being a retail trader, then you're shit scared for half an hour and you like a stunned deer in the headlights. So you don't enter again. When would have been an appropriate time to re-enter?
Okay, this is a good question. See, this is something else that's counterintuitive. I don't do any entries. Once I hold value, I might add to that value for 1 or 2 or 3 days, and that's it. I'm done for the month. I always say timing is everything. I work on a different calendar to everybody else. Not everybody else, but it. Trade location is the most important thing for making money, right? And there are certain times of the month which is the best time to get the trade location at the best value and to do that. I don't generally add to my positions after 3 or 4 days, probably 3 mostly. I just don't add to a position.
Yep. I think for us, for retail traders, and I'll probably speak for 1 or 2 other people, is we're so used to clicking out for 10 or 20 pips. So on day one, when you hit the jackpot with like 50 pips, you think it's Christmas.
Yeah, I know the feeling. Yeah, I used to be the same way. That's because it's not because you're doing anything wrong. You're doing everything right, actually. The only thing that you underestimate is the importance of time. In trading, the key is time.
Yep.
That's why professional traders always say, don't get into this job for entertainment. Because I don't have any activity to do in trading. It's a horrible job. There's nothing for me to do. I'm not going to be doing anything today. I won't be doing anything until next NFP. There's nothing for me to do. So I'll give you an example. What have I got to do? Nothing. There's no order. I don't order anything. I don't sell anything. I don't buy anything.
Okay, so if I go back to that GJ of yesterday, so I get stopped out at my 30 pips, which is quite fine.
Yeah.
Now I'm stunned for a little while. If I start thinking clearly again, when would be the next best time to jump in again?
Next month.
Okay.
NFP. This is it. Don't expect to be doing anything else. Manage your trades. If it's not worth holding for a month, it ain't worth entering, is it? Because all what happens is after the smart money has got into the market, whether you make the right choice on most entries after a week or 2 weeks, because you're not holding a strong hand, the market, as soon as you enter at the right time, the market's just going to take you out of the market. It doesn't care. The dealers are going to say, no, what the hell do you think you're doing? We're not carrying you on this journey. We're taking you out. Now, at the beginning of this meeting, I said, I want to show you guys how to make money. Now, don't think that I can't day trade and scalp. I'm the master at scalping. But I don't want, this you'll get to another time, right? I just want you guys to make money. And to make money, you shouldn't be thinking about doing anything in trading. And I don't do anything. How many entries do I have on this month? 1, 2 on this pair. And all of you would be saying, I wish I had 2 on this pair. Because this one's already reached $1,460 or something. I don't know what it is. Hang on, let me just get this. How many pips is this? And that reached 280 pips and is now at current market 250 pips. So think about this. Let me become a guru. Okay, now I'm a guru. There's loads of them out there. They're all selling Forex and spot market derivatives. Yeah, they're selling all these products, financial products. They're pushing all these ideas. Yeah. Trade the market 24 hours a day. It's easy to make $1 million. You'll be happy. Okay? Spend $1, get 2 hoses for free, plus we'll give you a minibus. Okay? It just isn't true. You've got to look at this business in a different way. You don't want to be buying and selling and guessing and picking tops and saying it's the end of GU now, right? I didn't draw the red squiggly line, by the way, on the chart. I don't know. Who drew the red squiggly line?
It's like a missile.
Just imagine that you did a different strategy. Now let's go back to the guru stuff. Okay, well, I'm going to be the guru. I won't show you the right way. I'll show you the wrong way. The wrong way is that once you start get moving along, can somebody remove that? I don't know if I can do it. Let me go to a note. Undo it. No, I can't do it. Try an eraser. Oh yeah, it's done. Right, so let me just get rid of this thing. If you're just going to keep thinking that the market is a place to buy and sell in only, it's not going to work. You've got to think of the market as a place to buy and sell in at the right time and at the right location. This is how you will make money. Now, there are other ways to make money. Like, I can scout the whole day. I mean, I've done it with Pierre a whole 4 or 5 hours in one night when we're chatting, you know. But, you know, that's a hard way to make money for you guys. But if you want to make money and you don't want to go through all the pain, you've got to nail down your whole trading approach to trade location only. And you want to limit your trades to say, right, I'm going to trade this month GU, EU, UJ, USD CAD, and Australian dollar, right? And that's what you're going to do. Then you're going to say to yourself, well, if I'm trading UJ, then I should be looking for shorts because gold is going up. And if I'm trading euro dollar, I should be looking for longs because gold is going up, right? So that's your first clue, yeah? Just a bit of basic understanding of the intermarket relationship, yeah? Now, when you talk about trading, you should be saying, well, I shouldn't really be trading unless I can get the trade at near the origin when the rubber band isn't so stretched at the beginning of the move at value, and that trade, I will hold it until the next non-farm payrolls. And if anything's going to take me out of the market, we'll be back to the chart, would be a trailing stop loss. Don't pick tops, don't pick bottoms, just let the market do its thing. Be non-subjective and just let it run. Now, if you want to start getting in here, you can, and I do, okay? You want to get in here, you can, and I do. You want to get in here, you can, and I do. But do I? Not really, because I'm thinking about losing volume. You're thinking about getting in, or where should my stop be? My stop would be down here for this move. Why? Does it make any sense? Why? It makes a lot of sense because I went in original position, maybe 2 or 3 lots, and I'm scaling off the size of the position all the way up. It's totally counterintuitive. Completely reverse to what any of you are doing. So my stock can be anywhere. I don't care about my stock because the money's already been made here. And the money's already been made here. I've secured my month money right there in the first 50, 60 pips. And now, from all the currencies that I traded, I call them scraps. And I say it every month, now I trade the scraps. The volume is taken off. I don't really care where GU goes long, goes short. I don't give a damn. I'm not going to be buying GU until next month. I'm not going to be buying any currency until next month. I hold value. I will downsize my position as the market moves on. I don't care about my stop anymore. Because, you know, after you've taken off, say, 1.5 lots, you're only managing now half a lot, right? And when you've reduced a half lot to a quarter lot, the money's already made. So any bonus you get is just a bonus. So you're going to give it as much room as you can because you've got nothing at risk. You've got only $1,000 left on the table in profits, or a potential 2,000 or 3,000 just from the balances, because you've already put in 5 or 6K in the bank in the first part of the move. So the further you get out, you just need to drag your stop or give the trade more room to breathe. Yeah. Does that make sense to everyone?
Yep.
So you want to talk about execution now, yeah? Trade location, yeah? So there are 2 ways to do it. One is that you fade this move, or if you fade the move, you're an intuitive buyer. If you get in early, you're a responsive buyer, okay? So you wait for a fade back to this pivot. You see where the mouse is?
Yep.
You could have missed it on Monday. I missed it on Monday. So what did I do? I said, hey, this is a high bullish open. We haven't even faded back. I just went in. I could see we're not going to fade back, right? I'm already in here, of course, because I was responsive. Fade didn't happen. If you wanted to get in again, here's the fade here. You could have got in. See, market gapped up here. Let me make it a bit bigger. You can actually see it. We just couldn't get a fade, you know. You could see the market trying to push down. So I just bought the damn thing here. It just looked like a bullish open outside the value open. You see how high we opened? It just didn't look like it was going back. So I bought the open, right? Then I figured this will go back. I think I left a market order around here. It didn't get filled, but you could have left a market order here. You could have left a market order here again. All right? And just follow that process until the end. But basically with me, once I've filled 2 or 3 days, that's pretty much it. Okay? So these areas, let's just need the arrow. So sorry. I don't know what that is. It doesn't want to go. So these areas, this is a demo account, by the way, guys. On these areas, this is where you want to try to get the fade. So we go to what we got on GU. Again, NFP is here. just run the move as it goes. Let's get rid of the mess so it's clean. So again, that's trade location. What was the last NFP before this one? Was it on the 2nd? Yeah. Last one was 9th, right? And the one before was the 2nd, I think.
What was the question, Dennis? Sorry, I didn't hear you.
The prior NFP, not last one, the one before that. Was it on the 2nd?
9th of March.
Okay, and this one was on the, oh yeah.
6th,
okay.
6th of April.
Yeah, okay, please go back a bit.
2nd of February.
Yeah, 2nd, no? The prior NFP before the last one was when? Here, I think, 2nd?
2nd of February or the 9th of March. So last month, March was 9th.
Okay, let me go to our chart. Change this. We had one in February, no? 2nd
2nd of February.
and 9th of March.
Yeah.
Okay, 9th of March. Yeah, same thing again, isn't it? So this 9th of March, let's just expand it. 9th of March, right? Let's get rid of some of this mess, guys. Can't see for shit here.
Okay, guys, it's time for me to catch my flight. Thanks a lot, Dennis. And
Where are you going? Are you going to Canada or US?
US, Orlando.
Okay, they're going to lock you up.
Probably. Yeah.
I'm just about to call them. Yeah.
Yeah. Yeah. See you out there, guys.
Oh, have a safe trip, man.
Bye-bye.
Enjoy. Have a good time. You deserve it. See ya. So 9th, yeah? So you can say this is NFP here, right? 9. That's 8. Okay. So again, you do the same thing, NFP. This is the 9th. This one. Let's just take an average level, NFP. I used to do these webinars on a live account, and it gets to be a mess. You know, you mess up all your charts and everything. No, this is going to be all this mess we're doing now. All right, so you can say that's the NFP, right? Guys, you can talk back because I'll get bored. Let's say in this white box here is the non-farm payroll. Right?
Yep.
So so we can say this is volume in time. So anywhere, hold volume in time. Got your stop, maybe around, I don't know, say you've got 20 pips stop from this area. Let's work out what 20 pips stop loss is. This is an older NFP, right? Yeah. Let's say we take a 20 pip stop. Here's your stop loss, would be about here, okay? I'm going to do a line for your stop loss. This is your stop loss, around a 20 pip stop loss, anywhere from this low, okay? So we're about 20 pip from the daily pip point. That's it. Your whole volume, your whole value. Don't let all this volatility kill you, man. Forget about it. Your whole value right here. I'll be back in a sec. And we did that We did that last month as well. We do it every month, same thing.
Anybody got any questions for when Dennis comes back? Okay, Andrew, I'll ask him that question when he comes back.
Steve, I think 2nd of February was the NFP before that, right? Before this time.
Correct, yeah.
All right, we're going to go back in history, guys. Right. I want to just show you its location, trade location.
Sure.
I'm showing you what no other trader will show you, basically. Because the ones that know it in the 2% are like, oh, we're the 2%, you know. Can't show anyone. But this is all they do. This is all I do. It's so easy, you know.
So Dennis, just a quick one for you on that example.
Yeah.
So the first one looks like 3 days went up nicely.
Yeah.
And then that 4th day is the push down, but then it looks like 4, 5, 6, 7 days. The next 4 days were all pushed down after it.
Yeah.
Yeah, 3 days up and then 4 days down. Would your stop loss still have been there at that NFP minus 20 level?
Yeah.
You would have taken off half your position or 3/4 of the position.
I would have been out. I think I probably would have taken profit. Let's have a look, you know. Let's just do it as theory, yeah?
Yep.
So we're in here somewhere, yeah?
Yep.
150 pips here. Yep. Yeah, I'm already scaled off. I probably wouldn't even bother to move the stop, you know, because it's only going to be, let's imagine that it's a small account for everybody. Let's say that that person could trade one lot, okay? Let's do this as theory, yeah? So imagine a person could trade one lot. He can't trade any more than one lot. So if he loses on his stop, he's going to lose $200, yeah? Because we're talking about a 20 pip stop. That's all you need, you know? Because you're inside at value, so 20 pip stop is going to work for you, you know? All right, and when it works for you and it takes you out, it's still working because that's the purpose of it. To protect you from losing more money. So let's say that you got out here. I think that's 157 pips. That's what it looks like, right? Unless I'm drunk. Probably ain't that many pips. I mean, yeah, it is. Yeah, it is because it's 147. No, up to it works. And let's say it's 150 pips, right? So that's quite a considerable lot of money, no?
Yep.
Right, so let's say you take $1,000 profit. So now you've got 500 on, right? Yeah? So let's say you say 500 on is too much risk. Just reduce the thing down to $1. Take everything and leave $1. So you hold $1, right? So you get $683 out of your $1.
Oh.
So your net on one pair at $200 risk ratio, $2,330 or something, yeah? Counterintuitive, isn't it?
Yeah. Dennis,
too quick to pull the trigger and get out because we're so used to losing.
Yeah, it just takes a bit of confidence. What you need to do is that I run the real account. I always run a demo too because you've got to run a demo. You've got to practice when you're not trading. I spend the whole month not trading, yeah? Because I've done my couple of days swing thing, make off, shave off profit. You know what I just showed you there. So what am I going to do for the rest of the month? Well, I'll go to demo now and practice a little bit of scalping, a little bit of this, you know. I'm not going to be doing anything in the market. I don't do a single thing in the market after execution except manage those positions. Trade location and timing at volume. means I hold value. What does it mean if you hold value? It means you hold something that you expect to appreciate in value. What reason would I have to stop expecting value to stop appreciating? I have no reason. Ah, words of wisdom, yeah?
Yeah.
Okay,
Dennis,
question.
Dennis,
Yeah.
this is Dave again. You were talking about your entry there on that trade. I was under the impression you were waiting to the NFP news to come out and then enter, like say it spiked up and then it came back to your central pivot above that range, and then you would get in. So it looks like you're getting in either just before the news or right after it. I'm a little confused on that point.
It's a good question again, and both of what you said is right, both ways, right? Yeah, I do, and yeah, I don't, right? So you're correct. Now let me explain something. What I'm trying to do for everybody is to make it as easy for them as possible to make money, right? For me, we did NFP live a couple of times with the guys, you know. I can get in on other kind of hints because, you know, maybe it's the experience. For you guys, I would recommend that you fade the move. Now, I think you're going specifically to this NFP. And if you look at this NFP, you're talking about this particular one here, how to execute, right? Okay, let me make this the best way I can. I'm going to expand the chart and really dial down on this area, right? Okay. Let's look at it on a micromanagement basis. So the first thing we should do is to go to 15 minutes so that you can see the price action, right?
Right.
Right. This is the hour chart. So somewhere down in this history will be a tiny little box. There it is. This is the box you're talking about, right?
Right.
Okay. When you look at this price action, there's your fade. You could have faded the range, right? Or you could have faded this even, because, you know, broke daily pivot point, gapped up, faded back.
Okay.
Right. This TC stuff, Dave, we can get indicators for you, right? You see the TC here and the BC?
Yeah, I have them. Actually, I have them for the MT4. Yeah.
Yeah. So you're right in both ways. I might not have gotten here and gotten on the next day, no?
Yeah.
Or here, or here. If I got in here, the further out from the rubber band, the more stretch it gets, the more risk you're taking on board, right? My intention is just to nail everything, bag everything for the month, pay the bills, and whatever left is what I call them the scraps.
Right.
And let the scraps run for whenever they self-implode, you know? Now that's the sort of trading that makes you money. If you hold value, you should expect it to appreciate, right?
Right.
Yeah, so let it appreciate. Which reduce your risk.
That explains that, thanks.
Right, so what we're going to do now is we're going to go backwards to February. February NFP was at the 2nd, yeah? So let's go back to the 2nd of February.
When you've done that, Dennis, Andrew has a question that we can deal with, if you don't mind.
All right, let me get water. And you guys have got a bit more time? I just need to...
Yep.
Is that all right, yeah? Thanks. Where was we?
Either going back to the 2nd of February NFP or answering Andrew's question.
To Andrew's question.
His question is, if GU fades back to NFP range and trading below it, is the exhaust volume refreshed? Will the bias reverse?
Ah, good question, yeah. But they're all good questions, but that's a good one too. You have two types of months. You have an inside NFP month and you have an outside NFP month. You never really know what's going to be outside of NFP month or inside of NFP month. You just don't know. And you don't actually need to know. Let's see, UJ will be inside NFP month. Just give me a second guys. Clean up all this open stuff so that we know that we've got drawings. Move them. Keep drawings on. Do you want to look at this with indicators or without indicators?
No indicators.
No indicators, right? It's just confusing if it's there, right? Okay, get rid of GU. We're going to keep the drawing though, okay? All right. Let's get UJ.
Please leave a message.
See, I told you, every fucking chart I got is marked as UJ. All right, so initially, let the chart settle, guys, otherwise it's going to freeze. Can you see the UJ chart?
Yeah, looks like UJ, yep.
Oh, so I know that what Pierre meant, the dollar's on the move. It certainly is. One thing I want to tell you about UJ, if it breaks 108, we might get 118 or 124 by the end of the year. I'll explain that why later. But anyway, so some months you have an inside month, okay? So, yeah, okay, it's working. It's your NFP, right? See your NFP? Steve?
Yep.
So
Yeah, we
here's
can see it.
question. So we've had an inside NFP month, right? So what you've got is, you've got double distribution, yeah? Double distribution between buyers and sellers. Buyers, sellers. And then we just ended up in a trading range. This, I call it inside value, inside NFP range. So far this month, we've had double distribution. We had a good move. It was a really good move, actually. Charts are freezing. 1 second. Yeah. So you had a 70 pip move. Obviously, a 70 pip move back. And then now you broke the range. And the question was, What was the question, Steve? I forgot.
The question was, if GU fades back to the NFP range and trades below it, is the exhaust volume refreshed? Will the bias reverse?
Forget about it. You've already done your job. Timing and trade location is king in this business, right? What you're right, but you'd be wrong to even think that it would be important to you. It's not. You trade the trade out from trade location at time until its conclusion. That's the key. That's the key to making money. Is that cover it, or did I miss something? Because I can go into it technically, but as a trader, it shouldn't even be something that you should be concerned about, because the key is trade location, volume, trade the thing out until it's done, and when it's done, be done with it. Be done with it. You're not interested in it. Just get interested on the following NFP. Trade with the volume until its conclusion.
Dennis, this is Dave again. On this UJ chart you have here, you have that NFP ranger between the yellow dashes. Now, if that goes down like that, would you start to take the pullbacks and trade short at that point?
No.
Obviously, you don't know it's going down or it's going up, or would you not trade it short because you haven't seen a break of structure yet?
Okay. I'm not sure what part of the chart you're referring to. Right. This is UJ.
Yep.
This is
okay.
the NFP level.
Okay. So it breaks that. It's going south. So would you not take the pullbacks and go short?
Yeah, I would.
Okay, that's what I wondered.
Yeah,
okay.
And actually, you're damn right. I would, because I wouldn't be subjective about it.
Yeah.
I wouldn't say, oh, maybe if I go short, I might lose 20 pips. Yeah.
Yeah.
So the key is this. I'll show you exactly what I would have done. Okay. I would have said, oh, we're below NFP. I need a pullback. So I'll just make it a bit bigger if I can. I'm not sure if these charts are frozen. I'm sorry if they are. Okay, my charts they're delayed, so it means when I click, it comes late. Try okay, a little bit. Just bear with me, guys. This happens. Okay, there's a slight delay. Yeah, so. I want one expansion because there's one thing I want to show you. So we moved down below NFP here, yeah?
Mm-hmm.
So I'll be trying to buy the fade back now here.
Right.
In theory, yeah? Right. So for you guys, that's what I want you to do. Because I want to, the start of this is how you make money, right? So let's do it. I've clicked on this, it seems to be delayed. Here it comes. There's your fade. You know why this high volume now at the moment? Mm-hmm. See your fade here? That's it. You go in, right? So you end up some pullback here and that. Just ignore it. You see some good pips. Now you have to start making, do I take half off or not? For me, definitely. I mean, as soon as I get over 50 pips on any trade, I'm scaling off, yeah? Mm-hmm. That's it. And my stop's going to be, let's say my stop is about here. Sorry guys, I'm having a bit of trouble with the charts. Let's say this is the stop. Is this one? Okay. Let's say my stop loss is about here. Let's imagine that's 20 pips. Taking 50 pips off around probably here or there or somewhere like this, where my mouse is. That's it, I'm done. I'm not going to do anything else.
Mm-hmm.
It's done. Done deal. So we only got 50 pips out of this. You started seeing it getting close to your stop. You say, well, I'm so close to my stop, I better not. It's not worth being in the trade. Just close it.
Right.
Because there was no event after that. There was your event, NFB. This was your trade location. You followed the trade as much as you could. You did some good money management by taking off some of the trade. Then it pulled all the way back. Just said, oh, forget about it. I've had enough of this. Unless you want to fade the range,
Right.
you know, sell, buy. That's another subject, yeah? I
Right.
just want you guys to make money.
All right. Good explanation. That's all. I just wanted to make sure that
Yeah.
I was following you correctly.
No, you are. But what I want to be clear about, I want you guys to make money. Because, yeah, sure I can fade this range. Sure you can put another sell here, right? Sure you can sell here. Sure you can try to buy this and all of that. Forget about it. That's what the whole retail market is doing, yeah?
Mm-hmm.
It's trade location is key.
Great. Thanks.
Right, so let's look at where it is now then, right? Because it's broken out the top of the range, yeah? Sorry guys, the charts are a bit slow. I want to show you some interesting things on this. Well, of course 107.80 is always going to be important. But if you want, I'm going to try to get this onto a decent chart. This one, we need to get to a bigger time scale. Go into the daily chart now, VJ. No, no. This is going to help you. This is going to help you before NFP to do your analysis on what pairs you choose to put on your list of currencies to trade before NFP. Okay? Does that make sense?
Yep.
So what I do is I do a hot list and I get talking to Pierre and I say, Pierre, you know, I'm getting ready for my hot list for NFP, you know. What you've been looking at, you know? And he says, well, then I've been looking at Palladium, I've been looking at this, whatever, you know? And so you've got to look at, to give you an extra edge, you know, how to get a good hot pick, right? I knew I was going to be in on GJ, and I knew I was going to be on CAD, because they were nice currencies expanding well, you know? I got in on CAD, it didn't quite work out. I got about 40 pips, and then it pulled back, and then it went to 40 pips again profit, and I just scaled off the damn thing, you know? And then I gave up. I said, this ain't worth it. I'll just move on to other things. I got EU, got 80 pips out of EU, gave up on that, and then said, well, I'm taking all of EU. It's starting to pull back. And I don't know what happened after that. I think it broke out, you know? And then I took the GU, and that's continued, the GJ continued, and a few others continued. Exactly what I've shown you, right? But before the non-farm payrolls, I did some study. I do some study on charts just to work out what's going to be hot pick this non-farm payroll. Which pairs are ranging now that I'm not interested in? Which pairs are continuously expanding, you know. But when I looked at GJ, I said, UJ, dollar yen. I said, I don't like dollar yen. I don't want to trade it. I said, I'll show you one. Because it's hard to trade dollar yen. Now it's working the chart now. I hope. This one. This is it. Where's mine? Oh, yeah. All of 2017, all these guys in the group, we faded these edges. And we just faded the edges. And it got so boring, dollar yen just came off the strike list. We sold it to 104. I think it hit 104, and we did. We got 104 something here. And we did that because we sold NFP at 113 in the group. A lot of us took my trade. I said sell 113 in the group on the dollar yen, and we went short. And the 113 was here. This one. See this? That's 113. There was absorption pattern. And then after that, we started ranging again. So this is a daily chart. Can you see this is another range? Let me just try to draw it for you. After we hit the 104s, we've been ranging for weeks again, you know? So that was off the radar. If it's been ranging for weeks, you can expect two things. It will continue to range, or it will break out. So it wasn't on the NFP strike list for me on a hot pick because we've been stuck, you know, weeks of range. Let's try to go to a different currency, one that I put on my strike list, and I'll show you the reason why I put it on there. Okay. Go to the euro. Just give me a sec, guys. These charts are a bit slow at the moment. Don't know why it's taking so long. Sometimes it's like this, there must be high volume. So, get rid of these lines here. Stop losses. Pending orders, whatever they are. Okay. Something happened. UJ's looking interesting now, but we want it above 108. Something happened with EU, which made me say, hey guys, put this on your hot list for the year for 2018. And I'll show you what. This is very important, what I'm showing you, because this is like building your list to trade next month, yeah? So, since 2015, EU has been ranging. So you know it now, because now you can see it, right? And then in 2018, we got a fade. End of 2017, we got a fade. And ever since 2018, which is here, we've been going long, right? And now we're back in range again, yeah? Okay? But this is an expanding currency. We're not stuck inside range. When we've been stuck inside range for since 2015, yeah? So it's an interesting hot pick. EU has potential. Is that clear to everybody about picking a good pick?
Yeah, we can see that.
Yeah, you can see it, right, guys? You remember that analysis, yeah? Anything else need to be covered that's not covered?
So, Andrew, was your question answered? Yes. Okay. Yeah. Why are you using the body as the range of the NFP instead of the whole candle, the body and the wick?
Depends on what. Good question. Yeah, depends on the volatility. You can use whatever you want. It just depends how close to value you want your entry. You can do it either way. It's a good question again. Let's go to. It's a good question. You could use this daily candle. See this NFP candle? That's a daily. You're right. You can use the whole candle if you want. Depends on your style. Depends on you as a trader. You can use monthly candles, daily candles, whatever you want. But you could trade NFP to NFP by month. Or you could use. Let's see if I can do it. Because these charts are freezing up. I mean, firstly, let's stay on this one. You could mark this high and this low of that candle, and say this is the volume candle because it's non-farm payroll. What makes this candle different to this candle? Well, I don't know. That's probably NFP as well. And so once you start looking down at what candles work and what candles don't, all the candles look the same. But the ones that work is the ones that work because your volume, location, price, time. You know what's driving the market. That's the key. What date was the NFP in March? It was 9th or 2nd?
The 9th of March.
Okay. So I'm assuming this is April, no? Let me have a look. Hang on, guys. So let's just look at the candles on a daily on NFP. It's a great question. Right, that's the 5th of April candle, which was marked correctly. Now I'm going for the 9th of March, right? Sorry guys, it's not me, I'm not stupid. It's hanging, you know? There it is. That's the 8th. And that's the 9th. Again, look, you see it's wonderful stuff. Let me just mark this candle. There's your NF3 candle. I'm trying to mark the line. I did, yeah, there it is. Sorry guys, it's just it's hanging a bit, you know? Okay. Okay, okay, let's call this the candle. I'm trying to do. Okay, let me just do something. Okay, what I'm going to do, I use an arrow because it's hanging, everything's hanging. Well, it came out a line there, so if you look, This is your low of the candle here, pretty much. There's your NFP candle. It's the same thing again. You can use this high, you can use this low. And you can see now, price now is respecting the NFP high of the day of that NFP back in March. That level's respected all the way through, no? Yeah, you can use any time frame for the candle that you want. I personally use 15-minute low volatility, 1 hour high volatility. If I use a daily candle, I lose 1 day's worth of trade. Because the high of that candle will be the end of the day. But you can use it because on the Monday, if the next candle breaks the high of the daily candle from the NFP candle, go long, stay long. That's it. Okay, we did a bit of ranging, so what? You know, there's other pairs you will trade. Many will break out, many won't. That's the key. Trade location. And then the NFP was February 2 before this, right?
Yeah.
Right. That's the first. This is the February 2 candle here. Let me just get rid of that. Get to this. It was this one. Thanks. February 1. So that's February 1 on that. Yeah, this candle. So this one. We won't use the spike, we use the high, the close and open. There's the close. There's the open. Same thing, yeah? This second, the day after, you faded the NFP range on this candle, no? And then you got a break of NFP range on the daily. And that would have been come on. So it's all hanging in there. 156 pips. I don't think you can really complain about it, right?
Yeah, it works.
Yeah, and one thing you got to know is it's ranging.
Yeah.
What if you go to NFP? I don't know. Do you know what December's NFP, the date in December NFP was? Anyone? If there was an NFP, I don't know. But, you know, so you'll have some pairs that double distribute, you have some pairs that break out. And by knowing that trade location, you're going to make money. And you're not going to be thinking about, okay, it's Wednesday, I need to be trading. You need to stop doing that, you know? Run your NFP trades until conclusion.
I think it was December the 8th.
Let's have a look there.
Hey, Dennis, just a quick question. This is Dave again. You don't trade fundamentals per se. You don't look at like the interest rates and read all the microeconomic things. You're trading more from the events that are on the chart?
Yeah, it's a good question. Can I go to the bathroom and I'll answer it in a moment?
Sure. Great.
Okay.
I'll rephrase it then when you get back.
Great question. Yeah, great question.
Has everyone's questions been answered? Or has anybody got any new questions?
Hey, Sir Stephen.
Yes.
This is Ernie.
Hey, Ernie.
Yeah. I am new to this. This is my first time in a webinar from Master Dennis. I always read about the inside man and outside man. I'm confused which side is the outside man and inside man. Let's say, for example, this month UJ went down below NFP on the initial move, then went back to cross over to the other side. Is that the inside month?
I'm just as new as you. My understanding of inside month would be the range and the range. That's what I always thought an inside month was. But I'm not sure, to be honest.
Right.
The last Dennis.
Yeah, it's a good question. That. See, the thing is I'll answer it in different ways, and I'm going to give you an expanded answer because it's counterintuitive, right?
Mm-hmm.
So, a couple of things here. One thing that you should be there's a lot of questions, I can't answer them all. Let me just get rid of that, otherwise it's going to be pinging. See, let's say that the economic data supports a stronger dollar. So we're looking at the fundamental analysis and we say, oh, it's going to be long, yeah, because the fundamentals, they support a strong dollar. Well, no, it doesn't work that way because fundamentals are not sentiment. And what drives the market is sentiment. And give me a second, guys. I'm going to close. Oh, right, yeah. So the economic data might support a strong dollar, but the problem is with that ain't sentiment, right? So you think, oh, I'll buy a dollar because the fundamentals support a strong dollar, you'll probably be wrong. Because even though the fundamentals support a strong dollar, it could go down, it could go long. You just don't know. So this is the problem with fundamentals. But fundamentals will give you a gauge on the long-term view. So, okay, it might be going down now, but sometime in the future, it's going to go long. So you can't trade with fundamentals. But you can trade with sentiment, which you can get from fundamentals, right? Now, there's two ways you can do sentiment. You can take sentiment purely by the fundamental, but that can be wrong. It might go long, it might go short, because the sentiment might be different to what the fundamentals are. I'll give you an example. I've seen loads of times, we've had other traders in the group who have said, right, I'm buying because the fundamentals were really good. And I said, well, I'm going short because I don't think the sentiment is going to be the same way. and it's dropped short. Because with fundamentals, you can't underestimate the technicals. And you can't underestimate the fundamentals either. But do you need both? You don't need both. Do you need technicals? No. Do you need fundamentals to trade? No, you don't. All you need is volume at time, at price. Okay? Because that is the sentiment. So it's a great question because the sentiment is all in those two little yellow lines. Then it takes out the guesswork. I don't need to guess. I'm just going to trade. If it's above this yellow line on the chart, I'm going long. If it's below it, I'm going short.
Well, that's very good. That's a real simple way to look at it, and that's the way I like it.
Yeah, it's a very simple way, and you're right. It's absolutely simple because trading is counterintuitive.
Yeah.
Trading is not forecasting. I don't even forecast. I can, and I do it with the guys all the time. I'll say, right, buy at 113, take profit at 114, and I'm 99% right most of the time, which is why the guys stick around, you know. But I don't like doing that because I don't want to teach people to do that. And then somebody came up with a really good question to me one day. They said, "Dan, do you trade your forecast?" I said, "No, I never trade my forecast." That's a great question. He goes, "But then your forecast make money." I said, "I don't need a forecast to make money. I'm just giving you a forecast to help you guys make money." He said, "Well, what do you mean?" I said, "Well, I never have any expectations of the market. Because as soon as I have expectations, I limit my capacities to earn money." Someone says, "Dan, now why should I take profit?" All right, take profit 150.55. What happens? You just miss the next rally, right? You close at 150.55, market moves 150 points more, big rally up, you just missed it, right? So, yeah, exactly. Yeah, it's counterintuitive, isn't it? So, no targets. It's about execution, location, location, location. This is where I'm in, that I have it to run. I don't know if it's, I don't know if GU is going to go long. I don't need to know if GU is going long when I took my execution. It's irrelevant to trading because it's counterintuitive. Now, in the retail world, they'll be like, "Yeah, no, it's time to short, you know? It's gone up 100 pips. Oh, let's start going short, you know?" So they made 50 pips on the way up and they lose 100 pips on the way down, you know?
Yeah.
Yeah, it's not. Do it all in reverse. I've got my entry at trade location. I always say to everyone, no, I live in a vacuum. If you want to make money, live in a vacuum. What's the news on the dollar? Don't know. Is the dollar going to strengthen? Don't know. What do you think of UJ? Don't know. Where's GU going? Don't know. Don't need to know. It's got nothing to do with trading. That's forecasting. Traders are not forecasters. I just want to hold something at trade location, at value, and I expect it to appreciate in value so I can make some money off it.
That's very good. Thank you.
So that's the key, you know. You've got to change the whole retail attitude and just look at what at value. So let's go. February 2nd, yeah? What's the NFP? Or December?
There's a question from Ernie regarding inside and outside months.
Yeah.
So the question was, UJ this month went down below the NFP low. It's now crossed over NFP high. Is that considered an inside month?
It's been an inside month up until it crossed NFP high, yeah. So all month you can say now. What day are we? We're 2 weeks into the month, I guess. Let me have a look at today's date. You see, I'm a lunatic. I don't even know what the date is. Today's the 13th, Friday. Yeah, we're 2 weeks into the month. Okay, we're a week out from NFP. It's our first week. So markets haven't really started moving yet from that volume. Some have expanded, some have not. Some have done a double distribution, meaning that they're inside NFP month. UJ, has been an inside NFP month as it's returned to value at the NFP range. Now it's tested the high, it's broke the high. Traders will wait for a fade back by the high. That's it. If you get stopped out, bad luck. That's it. That's the way it works. It's not subjective. There's nothing subjective about trading. Once you start to be subjective about trading, you won't make any money. You'll pick highs, you pick lows, you pick tops. Then you'll be saying, oh, I'm not going to enter there. It might fall back. And bang, you lost the trade. You didn't take the trade. Don't be subjective. Can you ask if that answered the question?
Yes, it did. Thank you. All the questions have been answered so far.
Right. So if we go to a smaller time, if we go back to the UJ one very quickly, if we can. No, we wanted to go back to the NFP. I wanted to do that now. So we've marked, it was marked up until February. Oh no, we didn't do February. February 2nd, was it?
Yeah, 2nd of February.
Is this NFP February 2nd? Let me have a look. That's the 4th. Yeah, it's about that one, right? So December.
December was the 8th.
Okay, the 8th. December 8th. Okay, give me a second. Guys, what I'm showing you is really important, and what I'm showing you now will make sense. Or you don't need to be subjective, okay? Oh, well, we didn't mark January, did we? Okay, we'll mark this one first. Before the chart starts. Alright, that's the 7. So I can get the 8. That's the 8. Oh no, it's this one. I thought I had the line. Throw that. I've marked the 7, so I'll mark one day before it, yeah? After it, I mean. There's 7, I'll do. Now we'll get the, that's January. February was about the same date, wasn't it?
2nd of February?
Yeah, 2nd, I thought it was. So. Sorry guys, it's just very, it's lagging, you know? Yeah. This is the 4th. One more. That's the 5th, so we can do it this way. Let's do the, that's the 5th, this is the 4th. So, 2nd we'll do that. Sorry guys, it's lagging, so I can't be bothered restarting the platform. 5th, 4th, 5th, 1, 3rd, 2nd, no? Then we got next NFP before that.
The 5th of January?
No, we just go to December, I think. We'll get to December, then we'll do January later, right? So, and December was what? 8th.
The 8th of December.
Here we go. Let's just drag that across. I'll do. So this is 8th of December, yeah? So, when you get a good expanding pair, there's your NFP. You don't need to be subjective. We're trading above this candle here. Be long, that's it. And let the trade run to its conclusion. It's here, right? Say what? I don't know how much mini picture. Maybe make thousands, yeah? That's the next NFP you see. You know? They say you're getting on the NFP high on this candle.
Wait, 600.
Yeah, 700 pips almost, yeah. So that's what I'm telling you, you don't need to be subjective. Why do you need to pick a top? Why do you have to pick a low? You don't have to. Why do you have to get in here? All of these locations. You're just taking risk, you don't know where it's going. Once you hold value, you expect it to appreciate. If it don't, tough luck, forget about it. You're not going to lose money. Even if it don't appreciate much, you're not going to lose, are you? So every trade that I take, I just hold value. That's it. And I will scale off. This EU, I would probably scale off 100 pips, 70 pips, 80 pips, left to scratch to run. So let's say I left a quarter lot on, you know, $2,300 on that one trade.
Nice.
And so if you can stop being subjective, then you can start making some good money. So let's take this one. That's a 200 pip trade you got from that NFP. You probably would have been crying. You know, I'm crying now with the guys. Oh, we've only reached 300 pips since the first week, you know. We're all crying, yeah? Because we want more. We want 500 pip trades every time, yeah? But we can't always get it, yeah? On each currency. GJ might do it, but no, it did 300 pips. GU done 280 pips. GJ, oh, tough shit, you got 70 pips. Well, stop complaining, yeah? So what I'm trying to say is, just you don't need to forecast. You don't need to know what the sentiment is, because you know the sentiment. You don't need to know what the fundamentals are. The sentiment, you know it because it's between these two lines. The fundamentals, the sentiment, everything equals to, am I trading below this line or trading above this line? In this one, NFP, the sentiment and the fundamentals equal. Am I trading below this line or above this line? Sometimes you get stuck, you get inside range, right? Okay, you get double distribution months, inside NFP months. Tough shit, you know? Who cares? One of them's going to expand. One of your picks will expand. Some of them won't. Some of them will. So once you start to realize that you're going to use the same stop loss amount every time you trade, you're going to use the same position size on every currency every time you trade, you're going to use the same entry technique on every currency every time you trade. There's no subjectiveness in trading anymore. Now you're a trader. You're not a forecaster. You're not an analyst. Those people are not traders. Traders buy something at a certain price and expect it to appreciate. If it doesn't, good trade idea, bad beat. Not every trade is going to be a good beat. That's how easy it is to make money in this business. Unbelievable, isn't it? Nothing complicated at all about it. It's only you as a person that makes it complicated.
I've got a question, Dennis. So we jump in on the first day of the NFT and we make a few $100, for example. What do we do for the rest? What's the best methodology for the rest of the month?
That's what I told you. If you're opening a mini, you can't really reduce its size, right? But if you're opening 2 minis, you can get 1 mini off,
Okay.
70 pips, bring your stop, break even, run it for the rest of the month. That's it. And that's what every professional trader does, whether he's got $1 million account, $1 billion account, or whatever. They don't do any work. They hedge on fear. They hedge their long positions on fear, and they enter at volume. Because if they don't enter at volume, they can't enter because their volume is so high. Yeah? So I'm teaching you, I've shown you, not teaching, I'm not a teacher. I'm showing you, if you go back to the chart, there's the volume. That's where the big money is entering, on the volume. Why are they entering there? Because every single retail trader almost in the world said, oh, look, downtrend, and went short, right? So now the liquidity is there for the big money to enter positions based upon these losses, right? So they get in. And so what do? We do nothing. We don't think, we just swim. So let's start swimming. Okay, we're above, I'm swimming. Swim. Don't think. And then now you're a trader who will consistently make money. So will I enter on this pullback? Nah. Maybe 1 or 2 days out, I told you I enter, that's it, I'm done. Done for the month. And if it keeps on going, I'm really lucky, right? But I don't care if it's not done for the month. Because if it's not done for the month, I'm going to do next month. So this is 1 month's worth of trade, right? Here to here, all right? Get your entry. Don't pick a top. Think about how many tops you guys are picking, right? Oh, it's a top, time to go short. Oh, it's expanded too much. I need to take profit. No. Get your profit off quickly, right? And let the balance run. But if you run it that month, you've got 800 pips. You got on this month, let it run. Say you got 50 pips off or 100 pips off profit. You got here, you pull back, stop loss, break even, you made 50 pips. You can't complain. Some will run, some won't. Great, isn't it? So if you understood what we're talking about, it's hard for some people to understand because they're already kind of like brainwashed in the retail way of trading. You know, picking bottoms and trying to get the right price and all of this sort of stuff. Yeah. You know, you're thinking, oh, you know, should I target 180.50? Target what you want. I won't make a target. I let the market take me out of the trade. I've got nothing to do with the trade. The trade trades itself. This is where I think the value area is. Will it appreciate 100 pips? I don't know. Will it appreciate 1,000 pips? I don't know. Should I care? Why should I care? Should I know? There's no need for me to know because trading is systematic and it's non-subjective, right? So just let the bloody thing run, but cover risk. So I'll cover my risk. I'll take some profit off, sometimes at 100, sometimes at 70 pips. I might even take profit off at 40 pips. Who knows? Doesn't matter. That's just the way I feel about fear and greed. But the balance is just going to run, and I call it let the scraps run, and we just run the scraps. So trading is not the same game that you thought it was for all of you. Pierre certainly learned a lot of things from me. He came to me, he's really good now. He came to me, he had a problem, said, then I can't make money, what do I need to do? I spent time with Pierre, sorted him out, sorted Charles out. The owner of 240code.com, a guy called Albert, sorted him out, came to me, he found me. He asked many traders around the world where to get the best mentoring from. talked to hedge funds. He talked to on websites. He talked to traders in London. They told him to come to me. He found me. I didn't want to deal with him before. Normally I hide away, you know. I'm out and in the public for a little while with you guys, you know. But yeah, so it's easy. If you want to get some good analysis, you can talk to Albert. Albert's a really nice guy. He started trading when he was 15, and I think when he got to about 24, 25, he decided that he needed some help. He found me. At that time, I said, okay, just share your account with me. So he shared his account with me. I said, give me your password. You sign in, I sign in. I'll give you a text every time I sign in. And I traded his account for him. I said, look, you just learn from what I do. And I'll trade your account. Because I won't show you my account. Because I don't want you to see for security issues, yeah? So anyway, he did it. And I traded his account for him for 2 years. I panned it eventually to my account. And he just saw what I did, and he learned from what I do from just watching me trade every day. He just would sign in and say, oh, fucking hell, Dennis has got a trade. And anyway, something funny happened. I tell you, it was unbelievable. Apart from that, one day Albert wanted to start a business, which is this 240code.com thing, right? Yeah, it's really funny. So I said, well, you can use 240code, my name, because it's one of my brands, you know. I'm known in the world as King of Yen, and I'm known in the world as some other stupid names, and also a tart. Anyway, so what happened was, Albert made an appointment with one of the largest funds in Europe, yeah? He goes into the hedge fund, right? He had an appointment. He goes, yeah, I have access to the best trader in the world, you know? And he goes into this big conference room, you know? I said, he don't fucking mind. We'll fucking sign into the account right now, yeah? So he signs into the account. All he can see is a big fucking huge loss, you know? So he and he's in a boardroom. And my trading screen is up on the screen. It's amazing. It's a beautiful story. Right? All stories are beautiful. And he told me that he was going for this meeting. So I thought, fuck it, let's put this into a fucking loss right now. So he's going to this meeting, though. He gets into the meeting and he goes, oh, this is the best trader in the world. And I said, yeah, we're all excited. We've all heard about him. We've heard about him from London, from New York and that. And we just want to, you know, just to watch him trade for 20 minutes would be fucking awesome. So anyway, I fucked it up completely for Albert as much as I possibly could, yeah? Right? Yeah. And I said to Albert, leave your fucking mobile on so I can hear what they're fucking saying, you know, in the meeting, yeah? So Albert signs it. I hear Albert go, oh my fucking God. And everyone goes, ooh. This big huge fucking loss on a great big screen in front of them, yeah? I said it all saying, well, Albert, it doesn't look so fucking good, does it? Yeah? And Albert said, well, he's a fucking good trader. Yeah, and so I messaged Albert, right? I said, Albert, tell them not to take their fucking eye off the screen. Right now, right? Because it was one of those moments I was waiting for. It was a fucking trap for the broker, you know. I set it up so beautifully with some faking moves and everything else. I thought the broker would be fucking drawn into it. So I hung a 60 lot order short, right, in a bull market. And my loss was long. I'm losing money long, no? Do you understand, guys? I'm losing money on the longs because the market's short. So I put a limit order up here, fake, 60 lots, right? So I called Albert. Make sure those fuckers are watching the screen, wait for what happens, and then boom! My long was fucking $150,000 profit. My EA took out the sell order, switched it to a long as well. And they were all crying their eyes out. What happened? How did he do that? What happened? You know, it was a classic, you know, like a Hollywood movie. I set everybody up. I set Albert up. I set up the hedge fund, everybody. You know, and then they were pleading for us after that. then Albert says, "Oh, we signed a contract. They want us to sign a contract. They want to give us $2 billion." And I said, "No, thanks, Albert. I'm not doing it. Just make them plead, you know." So we didn't. We didn't take the deal. I wasn't interested, you know, because I like to live my own beat in life, you know.
Sure.
I don't want to have hedge funds call me out, Dennis. What do you think about this? You know, and you know, fuck that. Let's have fun. So, anyway, trading. One day you get to a confidence level in trading where you just feel confident that you can do whatever you want to do, you know. But for now, all you need to do is make money. And I could take any trader with me and tell him what to do now. And if he just does it, and I'll just tell him after that, keep doing the same things and don't use your own opinion. But now you know what to do, you'll make money. You shouldn't have an issue. I can't tell you this, but one girl on our chat room, I'm going to tell you, but I'm not going to tell you who she is, right? One girl in our chat, her $500 account is $22,500 as of yesterday. Live.
Well,
And now you know how to make money, right? I've shown you. It's so easy. The answer is difficult because you've never met a professional trader before. You meet a professional trader, you get the answers. There's nothing standing in your way anymore. Stop loss is always the same. Execution is always the same. It's not a 24-hour market for execution. The market knows a weak hand. And the strong hand will always take out the weak hand. So if you're not executing at value, at volume, price, at time, you will be mercy killed. Does it make sense?
yeah, absolutely.
Yeah. Hey, Dennis.
24-hour market. Yeah,
Dennis,
carry on.
this is Dave. Could you talk a little bit about your trading background and where you learned all this?
Yeah, I will, but can I have a break? Like
Sure,
a minute?
sure.
Is that all right, guys?
Sure.
Hey, I'm a fucking drug addict, dude. Okay, sorry. I'm just kidding, guys. Hey, it's a fucking joke, man.
So there's a couple of questions I'll ask Dennis when he gets back from Victor and Vincent. Any other questions? Guys, Dennis is being extremely generous here with his time. We don't know when we'll get him again. So if you've got questions, I suggest we make use of it tonight.
Hey guys, sorry about the way I am. I am a bit rough. I'm a Londoner. I'm not a posh guy, so I do swear every now and again. But you know, sorry about that. Yeah. So, a good question, Dave. And Dave, welcome to the group as well. I'm glad that you found this.
Glad to be here. I've been trading for a bit, and this is quite different from anything I've experienced.
Yeah, good stuff, Dave. One part about my character is that I'm a person that reduces everything. It's like reduction, you know. So somebody comes up to me and says, "Yeah, I have this big problem," you know. So, and I say, well, you know, and then I seem to find an answer because I reduce everything down to a simple thing. So, with logic, okay? So, anyway, about my experience. Well, the first time I ever did some trading was one of my friends. And I said to him, you know, what do you do? And he told me, well, I've started trading. I didn't know what it was. And so I got into the trading thing. I went down to trading floors when they were doing trading floors that time, and I started reading in the library and started finding it quite interesting, you know, financial books and you know the things that you would do and everybody does. So nothing abnormal about that. And then I used to see the traders, and I used to chat to traders. You know, when they used to wear the jackets, the four traders, different colours. Yeah, got to know them. Then one trader that I knew, I said, "Listen, can I come to the exchange with you?" You know, and he was a British guy. He was in Manila. He went to the he worked for HSBC. He used to do trades on the Philippine Stock Exchange when they used to do trades down there on floor trading. And I went with him. I saw the traders chucking paper, you know, in the air and all that. So I got some interest. Then I started asking them how do they work out price. They told me they work out price, you know, by value and stuff like that with pivot points, right? So then I started, later on, you started getting MT4, I think it was, that whole platform and things like that. I started using MT4, and then I used to plot pivots, because you never used to have pivot indicators back then. I used to plot pivots manually and then, you know, do the lines on the charts. Then I got worked for a company called I got a job for 3 months, and then I got fired. It was a company called Apex. They were dealers. So it was like a brokerage. So I was on the dealing desk, you know. I see the orders come in, we'd fill orders, we'd get dealing with the liquidity provider, you know, the investors, and saying, all right, you know, this fucking idiot, you know, he's just fucking gone short, you know, support this trade, you're going to make money on the other side, you know, dealing desk. So then I used to work out. So from that, I learned how the dealers traded, and I can teach you about how dealers traded another time. I won't go into that now. And got experience on dealing desk. It's back in London. So I'm really living off a salary. I'm not living off my own account. My own account's not really going too many places, you know, small account. I need, and on the dealing desk, I wasn't making that much money because that company went bankrupt in 3 months. It wasn't because of me. That's why I got fired. You know, it's just the way it goes. But it was experience, and we pick it up the way you go. Then I got a job at RBS, just through one of my friends, RBS Capital. And I learned a lot how to trade from RBS. But I'm not a very corporate person. You know, I like to smoke. I don't like to be told what to do. And so I didn't really ever fit in down there. But I got great experience. I learned how to trade. I got one commission check, and then I left. I waited for earning season, got paid, left. Spent a lot of money, went on holidays, did a bit of trading on my own account, went around the world, had fun. Started to burn money like fucking crazy. Then I started realizing, hang on a minute, I need to take my trading more seriously. 7 years have gone by. I've taken jobs in between because trading does get boring. And then I've said to myself, you know, let me learn more, let me study more, let me talk to other great traders. I did, and eventually I ended up being a mentor for great traders who were mentors before. I ended up being their mentors. And so, you know, I can take any trader, any level, any famous trader, and say, look, you're doing a good thing here, guy. I can improve it for you, you know. So I don't have any mentors really anymore. All my mentors before, I mentored them, you know, now. Yeah. Because they said, then, you know, you seem to have an edge here, you know. So my edge is really, it's a simple case of deduction. So if I say I've got 20 years trading experience, it's 20 years of good experience and shit experience, just like everybody else, you know. And then because I'm very accurate at forecasts, I was able to attract good traders to me like magnets. They would say, hang on a minute, that guy said buy on this price and take profit on that price. And the market was nowhere near either of those. He got it exactly on the tick on both sides. And who's that guy? Let me find out about this guy. And so good traders start gravitating towards me, and then I bring them into the group and they share their experience with you. Now we have a brilliant trader, Master Santo. He's here. Charles is good. He came to me, needed help, got him sorted, and I'll put the edge on anyone's trading on any level. So pretty much the background. That's not entirely. So I trade other people's money as well. Don't worry, I don't want your money, because it's not, unless it's more than $10 million each minimum capital to worry about that. Okay, guys. Albert started this off as a commercial venture. I'm not so much into commercial ventures. It's up to him what he wants to do. I don't want to get paid. I don't care. Fuck, I look scary. So, yeah, like you guys, you went through a lot of pain, right?
Plenty.
You know, yeah.
Definitely.
Yeah, that's okay. That's called stage 1. You've done that, so now you realise that you want good quality information, not bad information. See, the only problem you're going to have now, from what I've shown you, is yourself. You're the problem. All of you are the problem. Because you won't, most of you will take what I've shown you, and then you do something else. On Monday, some of you will be taking trades. And Tuesday, and Wednesday. When you shouldn't be, you should just say, right, I understand what Dan said. I'm waiting to the next NFB. I'm going to start the process from the next NFB in the right cycle, in the right trading calendar. Half of you won't. Okay? You're going to say, right, you know, I'm going to try to get on the move now. You may get on the move now. It may work. It may not. But, you know, the logical thing would be to do is say, okay, UJ can get on. No problem, because you've gone above NFB high, right? So fade it back, try a buy. Doesn't work out, fade the range. Go short, sell below the range. But really, you wanted to be on that first move at trade location from NFP 1 or 2 days out, you know, and then no more trades added on after that, you know, money management from that point onwards. So if you trade the right calendar, you'll get the right results. Because quite frankly, it's not an even market, as you know. You could do a perfectly good order, but if it's not at the right trade location, then, and it was going to go long anyway, but because you ordered, they're going to drop the market short. Because they say, well, you know, it's a weekend, because there's all dealers behind there and everything. And the market runs an electronic balance sheet, right? Oh, well, liquidity is provided. Let's take a bit of that liquidity to support paying the profit of that bull. And that bull entered at 100. Now the price is 180. This bull just entered at 180. And we were going to go to 200. But hang on a minute, there's no need to go to 200 because somebody just entered at 180. So why don't we drop it to 160, take his money, and then we can pay this bull when we go to 200 with his money. Electronically, logically, the market does that. So it's all about trade location. That's why you keep saying, oh, why? I just closed my loss and the market shot up. Oh, what happened? You know, you say it right all the time, yeah? And you say, oh, if I didn't close that long, I would have just made 500 bits. You just close a long, market goes, boom, 500 bits. Because it knows it doesn't want passengers because you were not at the right trade location. The market makes its wind up. These are the passengers. These are the ones we don't mind taking with us. Anybody else, kill them. Mercy kill them. The market will just wait for you to close before it moves up. So it's all about trade location. So if you notice the gurus are paid by the financial industry. The financial industry always wants to attract liquidity providers. So the retail traders are the liquidity providers, right? They're paying everybody the profits. So whatever they teach you is teach you how to fail. They'll give you enough faith so you believe in yourself and you believe in your system. But once there's enough equity in your account, liquidity, once you have enough self-belief, they'll wait for the moment to strike and you're done, it's all over. They'll say, oh, I'm not taking $100 here. Just give him a bit more time if you take 10K. Easy, no problem. Yeah? But if you respect the market and respect the industry doing what professional traders are doing, they have no problem in paying you the check. Because they'll say, okay, you're on that side of the market. That's the good side, the professional side. Yeah, don't worry, then you're trading professionally. Yeah, don't worry about that. We'll just wait for the retail to get absorbed. You know, so there's plenty of liquidity for you later on to take profit. Yeah. I've got a trade of 15 years, right? No money, $100. And I've been telling them the same thing every fucking day. And they asked me for a loan the other day. I said, you never listen to me, do you? You never listen. I've been telling you for ages. When I was on FX Street, and everybody was going to FX Street because I was on FX Street, I said, I'm going long. You said, you're going short. Every trade I did, you did the opposite. Every trade I did, you lost money, I made money. You persisted by blind ignorance. So what happens with traders? They become insane. And they continue to do the same thing day in and day out, and they don't get results. And that person was on our chat, and they resigned from our chat. And what happened was, on the chat, in the live chat, in the group, I said, guys, everybody buy the bloody euro. She says, short in euro. Euro shoots up about 300 pips. We're all long, she's short. 20 minutes later, she said, right, okay, I'm going to leave the chat group. And she left, she's gone. And I spoke to her, still online with her every now and again. And I said to her, listen, you want to borrow money, right? She said, yeah. I said, listen, I'll lend you $5,000, but 1 month, you demo account, and you don't take a single trade unless I tell you to take it. And you take the trade that I tell you to take. Get a fucking phone call, don't I? Pick up the phone. Yeah, what do you want? I'm fucking short on the S&Ps. I said, I never fucking told you to be short on the S&Ps. Well, I fucking took it. I said, I fucking told you. I'll only lend money to you if you fucking do what I say. I said, why the fucking short on the S&Ps for? It's going fucking wrong. Yeah, but it was well, I just thought, well, I thought it was a good fucking idea. I said, well, fuck you, you know, do what I say. Don't take any single trade unless I tell you. Do exactly what I do, and then for 1 month, and I'll lend you $5,000, all right? Yeah, next minute she's fucking short on the euro, yeah? So anyway, so people get to this point of madness in trading. They think they know how to trade. They don't. They think, okay, is it a good time to sell euro? I don't know. Do you think it's a good time to buy euro? I don't know. Is this a good trade location? Yeah, it is. Should I be going long at this trade location or short at this location? Yeah, if it's above that trade location, go long. If it's below that trade location, go short. That's all you need to know. And then you've got to run those trades, bit of money management, take some profit off, let the rest to run, but use some common sense. That's it. So you've got to dump everything that you knew before. Otherwise, you'll never be a trader. You know, I normally have to wipe the slate clean with people, you know. All right, guys, anything else?
There's two questions here. The first is the key to look for potential expanded month currencies for the NFP play?
Yeah, from history. Look at the history and see if it's been expanding before. See, EU was definitely up for expansion. Look, this is longer term, right? Can you see my mouse, guys?
Yeah.
Don't look at my beautiful face. You have to look at the charts now. Right, so sorry, the charts are hanging right, but I can't be bothered to read sign into it. Okay, so a good expansion, look. Nice range, faded the edge. We know we're going to expand from this edge of the range. It's a daily, big time frame, yeah. Nice fade from the range. Bang, out we go. Beautiful NFP, right, from EU. Couple hundred pips. It's completely different to UJ. UJ's been in a small range for ages.
Okay, the other question.
Yeah, sorry guys, carry on.
The second question, pretty similar, is it okay to use the narrow monthly CPR to look for potential expansion the next month?
Yeah, I see what you're talking about. Yeah, it's a good question, actually. Oh, yeah. Actually, that's a good bloody question. I can show you something else, but I don't know if the charts are working. Let's see. Let's see if we can get onto GU. Let's get in some stuff for you. Bloody good question. That's going to cost you $100, yeah? So just send the check, yeah? All right. Okay, give me a second, guys. Right, there we go. Okay, I'll show you something really interesting. All of the questions are really good, but I like this question because it was something that I was going to tell you guys, but I forgot about it. So your question reminded me of something that I should have showed you guys as well. Narrow pivot range is indicative of a good, I normally take, outside of NFP, I like narrow pivot range trades. So I'll show you, I'll mark a narrow pivot range trades. So you can, any narrow pivot range trade, take it. Forget about NFP, you know. Forget everything. You just got to take it, you know. I'll show you a good one here. I just want to make sure that we got something that works first, because we're freezing charts here. So. Narrow pivot range, right, guys, on the CPR. See, it's narrow.
Yep.
This I would have taken as well, because it's narrow. You know, it didn't work out, that one, but you know it's going to happen, yeah? Look for some more, yeah? This one's a beauty, look how narrow that one is. Boom. Sorry about the sound effects. Look at this one. Look. Beauty, right? It's really narrow. Look at that for a breakout, yeah? Look at this beauty here. I'll explain why and if later, but I want you guys just to see it in reality. I always take these trades. I love narrow pivot range trades. See this one, guys? Look at that fade onto the pivot range. Go. Look at this little beauty. Narrow pivot range, right? So a narrow pivot range is indicative of a market that's going to break out. Why? I don't know. Yeah, but it is. And many traders do this. The first person to work out this stuff was Mark B. Fisher. If anybody wants to look into Mark B. Fisher's work, he was an ex-floor trader on the CME. He doesn't do much trading now. He uses mostly algorithms now. He's the largest trader on energy in the world. Mark B. Fisher. He wrote a book called The Logical Trader. Okay. Yeah. If you want to know what professional traders look at who use pivot width forecasting, they look at this. Inside value pivots, right? Yeah?
Yep.
See, these are all inside value here. See, I told you 20 pip stop. I'm always 20 pip stop, yeah?
Why is the middle one inside value? Isn't it above?
No, it's all inside, right? This one? It's still inside value because they're really overlapping, yeah? It's a little bit higher value, no?
Okay.
No, you're right. Look, this is overlapping high value, yeah. You're right, yeah? Would I have taken a trade here? Did I get a fade back? Yeah, why not? I would have taken this trade. I would have gone long. I would have lost money. I would have took the trade. I don't need to be subjective, right? I would have took that trade. I would have lost 20 pips, right? What else? So, would I took this trade? Of course I would have took this trade. Would I took this trade? Of course I would have took this trade. It's not subjective. Would I took this trade? Oh, sorry guys, it's moving. Give me a sec. Would I have took this narrow pivot range? You can see my mouse, guys, yeah?
Yes. Yep.
Yeah. Would I took this? Yeah, of course I would have. So let's just say, okay, let's look at some logic here. That's what I'm trying to show you guys. Blind recklessness of bulls. I'm always saying it. Win. Let's go through the chart one by one, yeah? Win, narrow pivot range. Loss, narrow pivot range. Win, narrow pivot range. Not narrow, not narrow. Narrow, win, narrow pivot range. So for 20 pips, what was the first entry here, no? The first one was, no, it's here, right? Narrow pivot range, yeah?
Yep.
400 pips, you lost 20. Sorry guys, but you know, I don't have a perfect solution. It's not subjective. The moment you make it subjective, you ain't gonna make money. Trading isn't forecasting. Trading isn't picking targets. Trading is letting the trade work for you and knowing trade location. That's it. It's a completely different ballgame in smart money. Dumb money is intelligent. Smart money is not. I always call the dumb money the intelligent money, and the smart money the brainless money. Because if I have to start thinking about what this pair will do, I drown. This is about swimming and not thinking. Yeah? And I think you're starting to see it now, guys, right? You're seeing that there's nothing to it, actually. All you've got to do is be prepared to risk your stop loss or a hedge, depending on how you want to manage your trade. So let's do some more blind science, just in case, you know, we need to do science is about statistics, right? So all of that work, right? So let's go backwards a bit in the chart.
So it's a good question. So if we went to the monthly, so for next month's NFP.
Yeah.
If
Oh,
went
you
to-
mean I go behind, or I go
So like-
this direction?
No, so now if we want to go, just say if you went to the monthly chart right now.
You want me to go to this monthly chart here?
Yeah, if
The
you just go
euro
to,
one.
yeah, any monthly, it doesn't really matter.
Yeah.
And then the question was, so on the monthly, if it's a narrow CPR,
You don't need it on a monthly.
you don't, okay.
Yeah, because no, I tell you why. Because it'd be very difficult to see the CPR on a monthly. Let me bring up some indicators on the monthly. Good question. Very good. They're all good questions, of course. But you won't see a narrow pivot range on a monthly CPR because the perspective is a month. You know, it's hard to see. It just looks like a mess. I'll show you. What am I doing? I should be here. You don't want to run indicators on a monthly chart. It's quite difficult. Okay. So now you can see your CPRs, right? You could do it. I've never done it. The first time I've ever done it. Okay, good observation. I'm looking at the monthly chart now. I've never looked at a monthly with indicators before in my life. Yeah, cool. I can see narrow pivot ranges on the monthly as well. So you can use it on a monthly, no issue. This narrow pivot range. Let me give it to this first. Bear with me. You can see I'm honest. If I'm as honest, I'll tell you. I've never seen it before on a monthly. Yeah, it's narrow, beautiful, right? You see that? Can you see my arrow?
Yep.
Whose question was that?
Let's just check.
Oh, don't worry. Tell him I'll boot him off. Tell him I'll boot him off the chat next week.
Vincent.
Vincent, you can use it, mate. I never have before. But looking at it now on a monthly, you can see the narrow pivot range. Can you see where my mouse is? Very narrow.
Yes.
You can take that. Yeah. That's wide, difficult. That's narrow. It's absolutely perfect, right? Yeah. Whatever time frame you're comfortable with, mate, go ahead and use it. It doesn't change anything. It's just your perspective, that's all. It doesn't change your trade, you know?
Cool. Okay.
You know, remember traders tell, yeah, very good one. Remember traders tell you about the big picture, right?
Yep.
They say, oh, you know, you've got to know the big picture, you know, the big picture. And so you spend your whole life looking for a big picture, don't you? And you never find a big picture. And you think, oh, I've got to find out what this big picture is. All these Wall Street gurus talk about the big picture. And you're like scratching your head, aren't you? And you keep looking and you can't find it, can you? If it was big, surely you would find it because it's big, right? Big things are easy to find, yeah?
So Dennis, what you're
But
saying,
the key, one second, mate. But the key is about the big picture. There's no big picture. It's so small. That's why you can't find it. It's all in that little bit of compression here on a narrow pivot range. That's the big picture. The big picture is inside that, and the big picture is inside the two levels. Right? Yeah. Sorry, mate. What's the question?
I was just saying that kind of what you're saying is we spent, well, I include we, probably all of us out here in the retail world, all this time trying to figure out directional bias on a chart, and we really don't need it.
Yeah, exactly. I have no fucking clue where it's going. Yeah. But I used to try to work it out because I was not a professional trader. I wouldn't have classed myself as a professional trader. But when I switched from being, a novice trader to a professional, then I realized I knew more about trading as a retail trader than I ever knew about trading as a professional trader. Because professional traders is the smart money, but the dumb mind. Because we have nothing to think about. But the retail trader is intelligent mind, but just dumb money, because you're making all these calculations and working this stuff out, and when there's really nothing to be worked out, if you point the boat north and you want to sail north on a boat, well, you don't know if the wind's going to change direction, do you? I mean, how are you going to know that? Just sail until you can't sail any further. And the point is, don't try to get on the boat in the middle of the sea because you might drown. You can get in at the harbour and, go through your trip from then onwards. You cross the harbour, you step onto the boat, you point it north, it's a sailboat, off it goes. Retail traders, I want to go north on a boat. Where's the boat? 2 miles off sea. Let me swim over there. Get on the boat. It just doesn't work that way, You will drown. So you have to think, right? I mean, you have to swim without thinking. Yeah, so the point is location. Trade location. And that's how you make money. Any time frame you're comfortable with, don't care. You know the trade location. You know the major news events. Some traders prefer to trade the FMOC. Some professional traders I know, they don't like to trade NFP. They think it's too volatile. I'll tell them, then trade it on Monday. Trade it the day after, the week after the weekend, trade NFP then. So but I don't want to wait, I want to do FMOC. But sometimes FMOC is more volatile. Next thing is, nothing will change this move from going up from NFP, providing all the news after NFP is expected. It's only the unexpected that can cause the reversal. The expected news is priced in by the professional traders. And here we've got all expected news. There was good news on the euro economy. Growth was above expectations, and the euro just kept on going up, right? As expected. But when you get news or you get so extended that the market needs to retrace, then there can be a reversal in the market. It's the unexpected that turns the market around, The expected just lets the market continue, volume's on, smart money's on, it will continue. But when there's unexpected news, meaning that it wasn't priced into the market, then it will turn around. CPI was bad, market expected it, they don't care. A little bit down on CPI, continue. So no need to know, you don't need to care. I didn't even know what the jobs data was last month. But I knew how to trade it. So I'm only interested on the time of the news release, volume, time, price. That's all I care about. Did I answer that question?
Yeah, everything's been answered beautifully. Thank you very much.
Very good. Thank you.
I guess you're wondering why there's RSI on my chart.
We've taken up a hell of a lot of your time, but if you care to explain, we listen.
Yeah, I don't mind. I've got it's time. Yeah, it's only 4 o'clock in the afternoon. Okay, RSI. Why it's on my chart? Because it looks good.
Must use
Any
it for
other
some.
questions? No, it looks nice. I like it. That's it. Any other questions?
Measure
So-
pull back to the central pivot.
This is the wrong time setting for the RSI. I'll give you some tips, right? If you want to use RSI, it's a great tool, but you've got to set the time of the RSI to the time scale of the chart you're trading, yeah? Maybe me and Pierre, we love RSI, but you don't need it. But me and Pierre just love it. I've always loved RSI, you know? I'll show you some magic. If the charts are working, I'll try to change to the GU. If we're lucky. I'll try to expand it so you can see a typical RSI entry at value. Just bear with me, guys. It's the charts I hang in a bit. I'll show you a couple of things so you can get some tools to keep you in shape, yeah? And I'll give you the settings because I know that you guys are going to get all confused in the market. You know, Dennis said I should be buying because above NFP, and then you start doing something else, you know? You start going south. I told you to go north. I know it's not easy because you have emotions, right? Because you're new. I mean, you're not new, but you have emotion because you're a human being, right? Okay, 1 second. I'm trying to expand the chart, okay? I can show you a bit of magic. Maybe I'll sign out, sign in. Let's see what's going on here. Okay, I'm gonna have to do something else. Give me a second, guys. Well, let's try to close this. We're gonna close the chart. I'm gonna open up again, and then I can make this easy. I'll show if you guys. You want to go or you want to see this thing?
No, I want to see this thing. Thanks.
Yeah, I mean, guys, if you're here and you're running out of time and that, just get on with your engagements. Yeah, don't be worrying about shit. You know, I'm always around, and it's free, and I don't care. You know, I'm not a snob. Do you want to quit? Yeah, I'm just quitting this platform, this demo account, because it's hanging up. I might go to a live account because it gets more broad bandwidth. You know.
Dennis,
Please.
when you said somebody went from 550 to 20-odd thousand, how long time period?
I would say she came to us. I have to think of a context on when I gave her the first gold trade. No, I don't need to think of that context. I can think of a UJ. UJ was trading at 114. So that would have been about 4 months ago, I think. Because I remember in the group when we were doing all that stuff. And then you see what Santo did with her. Santo's done a lot of work with her, and so have I. I did some of the initial work, and then after I I made her a bit of money, and she carried on with that. She got even more mastery from Master Santo. Master Santo's amazing, man. Honestly, he's amazing, right? He's got class, you know. I haven't got class. All right, just give me a second. Just to sign into something. I'll show you some magic.
He's very knowledgeable, Mr. Santo.
Yeah, he is. Guys, I'm using a demo, yeah? What's happened is, I've done live with the guys, and I've closed orders, and you know what I mean? I'm doing a painting, next minute I've dragged a stop loss over a buy, and I've lost my money, you know what I'm saying, right? Yeah, you know what I mean, right? I told Pierre, yeah, buy 108 fucking now, you know? And that was like 6 months ago. And at the same time I did my buy, I lost my money because I closed my buy trade. Yeah, and it went from 108 to 114, and I closed my buy when I was doing a painting by mistake. You know what? You know, it's common sense, isn't it? Which I don't have a lot of common sense. Okay, let me just show you some magic. Give me a second. It's signing in now. There'll be charts there in a moment. Get some water.
Stephen, did I hear him correct when he said it took her 4 months?
It's up on your screen now on number 2. Is it still that bloody thing, yeah? Oh, sorry, guys. Any chart? Can you see my mouse?
See your mouse, yep.
Okay, brilliant. That's the right screen then. Let's get some charts on board. Let's take one chart. I've got so many charts up in here. Let's close that. I don't want the bandwidth to get frozen again, yeah? It's not really the bandwidth, it's Lucas Copper's bandwidth. Okay, let's take this. It's been a high volume day for a minute. Get over here. Done this, minus this. Now it's working. See, I don't look like a moron now. I can move it around fast. I'm going to close some charts on the platform, just so that we can don't freeze up again. All right, that'll do. Okay, look. So the first thing was how RSI can help you. We're looking at a small time frame chart. It's 15 minutes. Now, if you took, for example, our NFP day, right, is here on that line. Let me just go a little bit bigger. I've got the RSI set to 5. I've got my levels at 80 and 20, take notes, and I'm using a 15 bar chart at these settings. Okay? And many of you say, oh, Dan, you went on fucking early on the NFP, why? Well, that's why, right here. There you go, guys. Can you see that where the mouse is?
Yeah.
Yep, on the bottom.
Guys, can you see the mouse?
Yes.
You can see this little tab down here?
Yep.
And see this bar? Let me mark it for you. Give you some little tips. This is NFP day, right? Between here. Here's the RSI. Here. Can you see it, guys?
Yep.
A lot of guys said, oh, Dan, you went early, you know, you're not playing by the rules. Well, you know, I deserve to do it my way, you know. So, here you go. That's on there. That's it. Oh, sorry, I haven't got headphones on. Sorry, guys. So, I'll repeat. RSI, entry, RSI, entry, right? NFP day, NFP candle, CPR by 5. And from this day onwards, I would only accept buy signals from the RSI because I'm trading above NFP. So here's a sell signal, don't care, I'm trading above volume.
Dennis, on that buy, you're below your pivot range though?
Yeah, but I don't care about pivot range. But you're right, I am.
Okay.
Yeah. Because I know that we got NFP coming, right?
All right.
Because let me just it's a good question. This NFP day, you know,
Mm-hmm.
this day is all for the NFP day, and so this is probably around the area where the news came, right?
Right.
Now let me see. This copy trades from my live account. Let's see where I did enter on this. I'm not sure, you know. Yeah. There's an order here. There's no line because there's no take profit. See?
Right. Okay.
Yeah.
Okay, you did wait until it came up, though. All right.
Yeah, it came up a bit, but I would have no problem in entering here. Just because the market came here doesn't mean that I was sitting in my chair. You know the rules, right?
Right.
I might have been, drinking a bottle of whiskey or something on a beach. Probably not a beach because I don't like beaches. But anyway, so if you look, works, right? So from this moment onwards, let's get rid of all these trade order lines because they're annoying. So now we got a cleaner chart. So this isn't a reason to buy this NFP, right? But it's reason enough for me because I know NFP is coming up and I'm holding a low price, right?
Mm-hmm.
Before news release. So all I've got at risk is down here to here. And if the market does pull up, I'm just going to make money just in a second, right?
Mm.
Okay. So now that we're trading above NFP here, all of this sell signals on here, I'm not interested in because I'm trading with the volume. I only want to trade long, right? So for you guys more than me, so that you can stay in shape, so you don't get out of shape. This is like will keep you in check, yeah. So where's the next one to add a position possibility on the NFP move? Well, the next signal RSI gives you is here. See that? Guys, you see it?
Yep.
Got it.
So let's move up straight. That would have meant that you just bought. Sorry, guys. I'm doing my best. Oh no, it's inside. Okay, so it's here, right?
Yep.
So let me just come here. So if I come straight up, that would have given me that signal there. Right? I want another. I'm sorry. I don't know the difference between the green arrow and the red arrow here. So we come straight up from this line, bang. And you can see I've got a buy there, right?
Mm-hmm.
So now you know why, don't you?
Yep. That's pretty
Right?
good.
So, yeah. Now, write down this. I'll show you a bit more because we're not finished because I'm going to give you different numbers because you're going to have to remember them. 20 years of research. Okay? Relax. Okay. 80-20 is the outer lines. The levels. 80-20. Period 5. On 15-minute or 5-minute chart. Up to you, you know. God, I look scared. All right, you wrote it down, yeah? Okay.
Yep.
Just give me a moment. I have to have a smoke, otherwise I'll get bored. Now, so we'll just continue with this one along a little bit more. Next signal it gave you. Would have been here. Remember, we trade in the direction of the NFP, right? Don't take the shorts. because NFP is wrong, right? Okay, so we would have took this, and if we take a work out where it would have, if it would have worked or not, I don't know. Just have to follow it up. No? Yeah, it would have been on this candle. Good enough, yeah, guys. You happy about that?
Yep.
But it's not perfect, yeah. But I'm just saying, right? It keeps you in check. It stops you from fucking going short. That's what I'm saying, right? Well, I'm gonna go short, you know, and bang, he comes up, yeah. Right. Next one. I think we get Confluence, the next one. I love Confluence. This is the next one, guys. You see it?
Yep.
Then on this one is a good one because you get the power of Confluence. Nothing more important or helpful than the power of Confluence. I'll show you the Confluence now. You can follow this one straight up. Yeah. You got the power of Confluence. You got RSI. You got narrow pivot range. You got the candle at price. I mean, you got three things telling you to go long. Plus the fourth thing, the most important, is non-farm payrolls. Huh? Power of Confluence. And this one, yeah. And then this one, yeah. Next one, yeah. This one, yeah, worked. Okay, so as long as you're in that range, you've got the NFP behind you. Looking at the long, you can look at the RSI for the long signals, but these are your best places to buy on the CPR, right? But if you've got the RSI, it helps you to remember, yeah? Because some of you get lost in the music will be playing, and you'll say, oh, the market's turning now. I need to go short. And now it's time to go short, right? So you start taking shorts, yeah? No, just look at your RSI. It's telling you should be buying, you know? It will keep you in balance, in tune with the market. Making sense to everybody?
Yep.
Okay,
Yep.
Say no more. Move on to the bigger time frame now with the RSI. Is that covered, guys? Just check, Stephen.
Yep, that's good.
Yep.
You good?
So,
All right. So it's 5 period. Don't use 14. Load of shit. Okay. All right. Next one. All right. Let's clean up. Yeah. We can change it here. Okay. I'm going to dump the indicators, right? Oh no, is that indicator? All right, I know what to do. Hang on. Did it? I sign. And indicator. And 20. Right. Yeah. So on a bigger time frame, RSI is quite amazing. This is at 120 days now on a daily, right? I think it's better on a monthly list. Let me just get it forward. Give me a chance here, guys. Yeah, the charts are good. Are we getting enough data? The RSI to complete. Bigger time scale, you can start using like if you're on the daily charts, do 24 days. If you want to look at the monthly on a bigger period, yeah, use 120 days, 3 months, 6 months out, 7 months out. So anyway, so what technical analysts do in banks and that, they try to forecast whether, you know, the price is extended or underextended. So if you're a trader that's looking at the longer term time frames, RSI can be handy this way. So if we took this area, Again, we're doing the same thing. One a monthly, one 120 days. And you can take this area. We're gonna go, you don't go more than 120 days, of course. So if you go up, this candle, no? So you're pretty close to the end of the market cycle, right? Making sense?
Yep.
Go to the next one. On the bigger time scale, this it's not, you don't trade this, by the way, guys, you know? You just need to know where you are. Here it is, on the lower end of the band. You need to set the levels a little bit tighter. This will be 40. Okay, levels 40, 2080, right? And this is 60-40. Okay, roughly. Okay, so lower end on the bands, then you can see that we turn around. Okay, now let's just change this now to a 60-day. $60-day, similar result, okay? On a daily, the 60-day is wonderful. On the daily chart, 60 on the daily. There's your level. There's your I don't like to use these retail words, but oversold, as they would say, overbought. Here you go, overbought, overbought. There you go again, at the bottom. You can see it helps with the cycle, right? There's a cycle low here. Okay. All right. And this is nowhere near this level, right? But this has got way to go on GU. Helpful or not?
Yeah, for sure.
So the 14 is not very good, you know. If you get MT4, automatically it goes 14. But Bill Williams doesn't use 14, he uses 5. Yeah? But broker's trick, probably.
So use 60-40 on both daily or monthly.
Yeah, you can use, when you go out to the bigger time frame, you can even go lower if you want. It just depends on, you know, the bigger the time scale that you want to look at, yeah? Whether you're going to look at, you know, so I'll show you the same chart, we'll just change to 40. Then we'll go to 20, 21.
Oh, sorry, I mean the outer limits. Does that always stay at 80-20?
The outer limits are never really that important. You know, they said it's 20 level and it's 40 level. When you go out on the bigger time scales, those levels don't really matter. You just want to be comparing the two highs on the two lows.
Okay.
So if I'm looking at a high on the RSI here, it's only a high to me because I'm considering the high on the other side. The lines don't really matter. Okay. Does it make sense? I'll show you. Let me make the RSI a bit bigger. These are the levels. That's a peak, that's a peak, that's a peak. There's a low. These levels I'm interested in. On the longer term time frames with RSI. Now I'll show you on 20. It's good as well. Oh, my RSI is 400, it's fine. Shouldn't be that. I'm supposed to do 40. 400 day RSI. Ooh. Sorry guys. Yeah, that's that. Here's the 40, very accurate. More accurate than the last one. Because I put 400 by mistake and I was wondering what the hell was going on. Okay, and there's a low here. Low, high. Yeah, it's good stuff. And then it helps you keep in balance, yeah? The market might keep going down even though that's here. But now you're here, at least you know you're on that area of the RSI, yeah? Whereby you're thinking, hang on a minute, I'm not sure if it's going to go lower. You know, the RSI is keeping me in that balance of that weight. Because the market moves in a way. So Best setting, 20. We'll do that now. This will help keep you guys in check. Right? 20. 20. I gave you that, guys. Look, you can't complain, right? There you go. So on the 20, it's starting to get towards this upper peak from before, you know? A little bit more. There you go. So that's how RSI helps you. So the purpose of the RSI for you all is so that you don't forget the direction and the side of the market that you should be following. In an uptrend, only look for buys from the RSI. In a downtrend, only look for sells on the RSI. Only consider a downtrend if it being a downtrend if you're below NFP. Nothing else constitutes a downtrend to me apart from the price is relevant to the last NFP. That's where the volume is. If I see the market going down and I'm above NFP, it's a bull market for me. That's it. Because I'm in on the trade at location. The only decisions I need to make is, do I close the trade or do I continue to run it? I'm not going short. Everybody clear? Everyone happy?
Yep.
Any questions?
No more questions?
Okay. All right, guys. Well, thanks a lot. Have a nice day and think about it next week. For some of you, what I would recommend is you don't trade anything until next non-farm payrolls. And you spend the time now, from now until then, working out your NFP plan.
Great
That
stuff,
way,
Dennis.
yeah, that way if you take this break out, you can concentrate on forgetting everything that you learned in the past. And concentrate on learning how to trade properly, right? I know you've all had success and you've all had some loss. So now that's the past, right? I swear a trader of 15 years tried to tell me how to trade. And they got no money. And they want to borrow money. I told you. And that trader never listened to me. Every trader that's listened to me, and people in the chat, even the masters, even the new people, are making money.
We will join them.
And some are close to making money. Very close. And you know why you didn't make money, Steve, if you did or not? You know, it's because of you, right? You didn't do what you were told, right?
I've made a bit of money now since I've been following you.
Oh, you have? I'm happy about that, mate. Did you start making some money?
Not millions. Not
I
millions.
don't care. No, even a $1 compounds wealth, dude. If you made $1, I'm happy. Because it starts like this. Before you meet me, you lose money. Then you go to stage 2, you might start breaking even. When you get to stage 6 and meet me, no, when you meet me, you go to stage 5, you begin to start making money. A little bit of money. Right? Now you're starting to make a tiny bit, you know? And then we go to stage 6. Al Pacino, man, Scarface. Rolex. Rolex. Yeah, and just listen to what I tell you. if you do exactly what I say and listen to what Santo tells you, you just go up, mate. You make money.
For sure. No, we appreciate your time on behalf of everybody. Just thanks very much for.
No problem. I'm sending the bills in the post. I'll get Sharifa to start doing the invoices. Yeah. First, you have to give me your car and your house. And then, all right, guys, take care. Yeah. Have a great weekend.
Hey, Master D.
Yeah.
That's so generous of you. Thank you very much.
That's all right. I have to pay back for all my sins.
Thank you very much, Dennis. Great stuff.
Yeah, my pleasure, man. So anyway, Dave, you got a good start now.
Brilliant stuff, Dennis. Real good.
Yeah, and then what you got to really do, Dave. I know you're an experienced trader.
Mm-hmm.
I know you're good at what you do. So try to forget what you do and start again.
I definitely need to forget what I've been doing.
Yeah, exactly. And if you need any sort of help, all the masters come to me to get straightened out. Yeah.
Hey,
all of them.
Just your little story about the gal going from 500 to 22 grand in what, 4 or 5 months? That's pretty inspiring.
Yeah, she did it. She showed me in the book the other day. Is that Ernie speaking?
Yeah. Yeah, it's me.
Dirty Ernie. Yeah, what's up, mate? You all right?
Identify the market structures, the swings, the opening, the highest, lowest.
I'm sure there's a fucking hedge fund in here somewhere. You can hear them in the background now. Talking to a hedge fund. Like, they got fucking Dennis Sherman doing it for you over there. Fucking hell, you know. Everybody's working on Fridays. Yeah. Ernie, I think you're gone already, right? It's Dennis. It's not the coffee in hedge fund. All right, guys. I don't think there's any more questions. I think that you've realised that traders are insane, and you don't have to think about what you do anymore. You just have to be systematic and not be subjective, because nobody knows. Nobody knows where the dollar's going to be next year. How would they know? There's no crystal ball, and you don't need a crystal ball. Steve, can you check? I think there's more questions.
No, just thank you.
All right, guys. I'll be in Manila this year. I will be. Don't buy me coffee, guys. I'm the one buying. I pay. So I'll see you all in Manila, in Makati. We'll do Greenbelt, and I like Cafe Havana Bar. I'll accept 20 people, no more than that. I buy. See you this year in Makati. All right, guys.
Well, we will see you.
Yeah, next couple of months. I'll go there. I have to go away now because Pierre's trying to look bigger than me by going to Orlando. So fuck it, I'll just go to the Philippines.
Wow. Great. That will be great.
Yeah. You know, I got a place in Salcedo. Who's that? Is that Ken? Who's this? Talking? Is that Ernie?
Yeah, this is Ernie.
Philippines.
I got a place in Salcedo Village. Do you know Salcedo Village?
Salcedo Village.
Yeah.
In Makati?
Yes.
Yeah. You know the Coffee Bean?
Yeah.
Yeah. I'm on Tordesillas. Just by the park.
Around the park.
Yeah, I did a park on Tordesillas Street. I used to live on the corner of La Vista, but now I'm on Tordesillas. Right by Coffee Bean. It's really nice. It's a good place to be.
No, I don't want coffee. I want beer.
Oh, fuck that. I'll go to the titty bar. All right, guys. I'll see you later.
I want beer with the master.
Yeah, what's that, Steve?
Can you stop sharing your screen just so I can finish the recording?
Oh, I'm sorry, mate. What screen can you see?
I can see you. You just got to stop sharing. So at the bottom where it's...
Yeah, and I'm sharing this screen with a GU on it, yeah?
That's correct, yeah.
All right,
But
so
I mean,
stop sharing.